I'm here and I'm feeling exaggerated, that's what you assume. The story's over now, I must conclude. I am conflicted, watching where I step still, hanging in the balance, not the life I want to live. I want to take it all, standing tall, fear outweighed the person you are. Oh, break out, I've got to see. Over the edge, feel like I'm floating through the air. The pain I felt is paid for, all is said and done. Oh, I am restricted, fixed upon the web. I need to kick the habit that my mind is breathing in. Break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless. Burning the bridge that keeps us. I'm here and I'm feeling exaggerated, that's what you assume. The story's over now, I must conclude. I am conflicted, watching where I step still, hanging in the balance, not the life I want to live. I want to take it all, standing tall, fear outweighed the person you are. Oh, break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless.
Yeah. Unknown Brain. Marvin Divine. I'm saying bye to all the lies and all the times you cried, saying that I wasn't right, yet I was right.
Over the edge, feel like I'm floating through the air. The pain I felt is paid for, all is said and done. Oh, I am restricted, fixed upon the web. I need to kick the habit that my mind is breathing. I'm here and I'm feeling fearless. Exaggerated, that's what you assume. The story's over now, I must conclude. I am conflicted, watching where I step still, hanging in the balance, not the life I want to live. I want to take it all, standing tall, fear outweighed the person you are. Oh, break out, I've got to see. Spent all my life holding all of it closely. I played it in a sense, a feel of discontent. I'm finally facing it all, fearless.
Hey guys, hopefully you had an okay day today. I know a lot of people with miners got crushed. I think that's a good thing though. I think we're set up for good things to come. All right, so I'm going to start off portfolio down about probably 130, 140,000 across all my accounts. That puts me at a gain of about 400,000, maybe a little bit less for the week. So I'm not going to cry too hard. Square and Tesla actually did really well today. Let me see here. I did a bunch of buying. So I sold some hood, which was flat to up earlier today. And I've got about, I'm up about 247% on that right now for my calls. So I've been selling some of that into today to purchase a bunch of miners. And actually it's worked out pretty good. I was trimming off, Clean Spark and then a little bit of hood already. So that's actually worked out really good. Let me just hop over here. So we'll look at some of those trades. So as you can see here, Clean Spark, we did a bunch of buying on that. Bit Farms, I sold some Square calls up about 200%. I sold hood calls, again, 240 to 250 as far as percent. And then I bought a ton of Clean Spark, WGMI, which is basically a conglomerate of a bunch of different Bitcoin miners, and Bit Farms. I just bought them up like crazy. So I actually think today is probably going to turn out really good in the long run. And I wanted to get more into the miners anyways. So today's a perfect day to do it. And if you've been somebody who's been saying that you wish you could buy miners, today was your day. Down 13, 14%, double digits on most of them. So that was a good opportunity. Oh, and we will be covering Mara earnings. You can see I've got it on the left-hand side over here, down here. So the second that really starts to move, we'll know. And so we'll keep an eye on that. I might have to resize it, though, because it looks like it's a little off. One sec here. Let me just do something. Let me pull that over and down. Is that more legible? A little bit. Let me pull it over a little bit more. There we go. Okay, that's more readable. All right, so let's move on. So we got the portfolio covered. I did a bunch of trades. I mean, I liquidated a lot of stock that I've been buying over the last 2 days too, diversifying into other things like NU and NVIDIA and the chips and all this other stuff. I dumped a lot of that real quick when I had the opportunity to buy Clean Spark down 12, 13%. So a lot of that I'm out of. I'll update my portfolio again in the morning. So market breadth. Let's refresh here real quick. Make sure we're getting the most recent. And this is probably still slightly delayed, but it should get us close. One sec. All right, so you can see some of the big boys got crushed again, especially Google. Oof, Google just cannot win. And just a lot of the different sectors. Software, semiconductors got rocked pretty good, as you can see here, whether it's equipment and materials or just semiconductors. And then you had Meta and Google's getting hit. But you can see a lot of mid-sized and some of these others. You can see some market breadth again. So we're still seeing market breadth, which is interesting and definitely something to note. Also, oh, I hate this. I hate how that keeps happening. Also, another thing I wanted to note, everything was down today. Everything. The Dow, 0.17, not a ton. S&P, 0.31%. But I still like these patterns that we're forming. They're still bullish. NASDAQ, again, Russell, down almost 1%. But let me show you another view of the Russell, because I don't hate what that's doing right now. Let me just see. Yeah, right over here. So if you look for our fib extension here on the Russell 2000 small cap, you could see that we want to break higher. We want to break higher. We want to go test this next fib zone and run. And I think the likelihood of that happening is incredibly high. So that's definitely what you need to focus your mindset on. Also, when Mara earnings kick in here, we'll take a look as soon as it looks like they've reported. So far, it looks pretty flat, but we'll jump into that. And then I think their conference call is coming up in about 56 minutes, just so everybody knows. If you are here for Mara, that's how long we have. All right, so fear and greed. This is for general markets. It's 79. So I also wanted to point out, again, all the markets are down. Thanks for joining the starter pack, John. Appreciate it, man. All the markets are down today, but we still saw greed go up. So it's interesting to see that happen. And if we just scroll down here, I'm just going to take a quick look. Market momentum. So the market momentum is what seems to be a primary driver, and the put-call ratio. So there's low puts, market momentum strong, volatility is non-existent. So even though we had a down day, it's still saying we're in extreme greed, which is very interesting to note. Real quickly, oil, pretty flat on the day to down. Again, it's hovering above this 50, but I think it's going to break down eventually, and we're going to test down into the 60s unless we have another new war. The dollar is actually getting rejected here on the 100. I like that. It's up today, 0.13%, and when the dollar's up, the markets are usually down, which is kind of what we saw. But again, I think this is going to continue to roll over. We'll see. Or if it just remains flat, that might help the markets as well. All right, getting into macro stuff real quick. So 30-year mortgages, kind of flat. Again, it's back in the 7s again. This whole mortgage sector is pretty dead. Mortgage applications, let's just take a look here. So again, same thing. You can see how it's kind of got this trough down here, but if anything, it looks kind of like if we went out further, well, it's almost impossible to see there, but it's just a dead market, and the mortgage market index is probably an easier way to see that. I hate these kind of month-over-month ones because you don't get the trend in there. But look at this. So the mortgage market index is at the lowest levels, lower than the 2000 time frame, going back to the 90s. So this tells you a lot about the real estate sector. I won't go much more into this. It's all dead. Refis are dead. They got a little bit of an increase before when rates looked like they were going to come down, but since that's kind of stalled out with that talk, it's just been hit. Now, GDP growth rate, Octa's flying. Oh, sweet, man. I got a lot of Octa. 17%. I like that number. That's not a bad number. Keep an eye on Mara here, but I like that 17% number. That's going to make 18%. It's going to make me a bunch of money tomorrow. So cool. GDP growth rate, 3.2% actual, so it was a little bit low. I posted about this earlier too. Really, this all looks pretty good. The price index is lower, so 1.7 cents the percent is a lot lower than 3.2%. We want to see price lower than growth. There isn't a lot to talk about here. Wholesale inventories, pretty flat to up. That's to be expected. We just have retail is slowing down, manufacturing is slowing down, but we're still seeing a really strong service sector, and other parts of the economy are maintaining. So, and we got lots of money. We're awash in money. And then we have low unemployment, and I don't think that's going to change. So got wrecked. That's a bummer. I don't know if there's really much more to cover in this. Real consumer spending quarter over quarter, 3% versus 2.8 expected. Again, I kind of like to see that. It means margins are probably going to be good. It means earnings are probably going to be good. We want to see these numbers maintained. Quick look at the CME Fed Watch tool. How are we doing today? When are we going to lower rates? That's the gist, right? Anything? All right, here we go. Not happening in March, 2.5%. I was pretty wrong on that. Let's go to May. May is about 20%. Not super likely. June is probably where it's at. We're at 63% roughly, a little bit more than that. So that's probably when we're going to be lowering rates. I think the market is pretty well adjusted to that now. All right, real quickly. I want to jump into here and talk about a few things with Bitcoin. It's going to be a lot of Bitcoin because I don't know if you noticed this. That's where all the action's at. So we're at, I posted this just the other day and said that we had 12 countries had all-time highs, and then it was 14, and now it's 30 plus countries that are at all-time highs on Bitcoin's price action. And if you paid attention to the fact that we hit 64,000 today, that's obviously happening here too. Now, I did want to say, I did do some posts. So Open interest has been destroyed. Shorts got utterly wrecked on Bitcoin today. Now, if you were wondering why we went up so fast, it was because of them. They fed us, right? Because as they were consumed, they had to purchase Bitcoin and get back into the market, and it just shot us up like a rocket, which is why I said earlier in the day, hey, we could get near 65 like quick today even. I said it wouldn't be crazy, and we got really close. But they're exhausted now. They're wiped out. They lost $1.7 billion. So for that reason, things might actually start to, table off for a little bit. Also, something else to note right here. Let me zoom in. Sorry, I'm not zoomed in very well here. So this is another thing to note. This is the funding rates open interest weighted. So when this is in red, it means that the shorts are paying the longs, which is great. You want to see that because it means we're probably going to bounce really hard. Now over here, we just got the highest read in 3.5 years, showing that the longs are paying the shorts. So again, with what I just showed you with shorts getting liquidated and this, I think we're gonna be here for a while. All right, let me see what else we got here. I wanted to reiterate this. I loved it because it was colored. So in 2020, the world changed in Bitcoin right around pandemic time, right? And so before that, we had the amount of Bitcoin on exchanges growing and growing and growing. That's what's represented in green here. The price is up here in orange. Since that time, it is dropping. We've lost almost 45% of the Bitcoin that existed and is not on exchange anymore versus what was there, in March of 2020. So we're seeing Mara's down 10%, 11%. So glad I don't own Mara. That's cool. Probably drag down the other miners, but we'll see what happens here. We'll check into that in a second. I'll just finish up my macro thing here. So yeah, so Bitcoin, there's way less Bitcoin on exchanges right now that's available. And when you combine that with the Bitcoin ETFs in the USA, soon to be South Korea, soon to be Hong Kong, and you combine that with just all of the money that can flow in here and the FASB rules that should help people that hold Bitcoin. Now Mara's only down 5. We'll see what happens there. They should actually be getting a big benefit, but they got some weird accounting and I don't know. They're just strange. So let's see if this turns positive. It still could in my opinion. But all I'm saying is Bitcoin is set to flow. There's still so much liquidity in the system. Global liquidity is still going to need to be strong. And you've got low supply. You've got these OTC desks, the over-the-counter desks, drying up. They're drying up. They just don't have anything left. And then you have all these Bitcoin inflows, record-breaking Bitcoin inflows. Let me get to that real quick. Right in this image. This is excuse my French. This is crazy. This shows that by the middle of the day today, we broke an inflow record for the Bitcoin miners. Halfway through the day. And if you look, the last 3 days have been record-breaking, or close. That says a lot about demand. You need to understand this. It's not slowing down. I did this real quick. I wanted to show it. So, really basic, right? It's an inverse head and shoulders that I believe could be forming on Bitcoin. Now, I don't know if it has to go that low. It could just go into like 50K maybe. Maybe it doesn't even happen. Maybe it goes up from here. It's possible. Now, my whole point is I just wanted to show the measured move for it, and it just happens to coincide with 280,000. Why I find that number so interesting is if you look over here, when we just draw on a log chart a straight line here for the bottom support zone for Bitcoin that worked perfectly. This line, if you go into lower time frames in the daily, that's how I drew it out. I haven't changed this bottom line in years, right? But it still worked perfectly. And then this top line here for resistance, you can see that they're operating in what appears to be a channel. That channel, if you look at the fib extension, the trend-based fib extension, just happens to coincide with the 280,000 mark, which is the exact same number we're looking at for the measured move for an inverse head and shoulder, maybe a cup and handle, whatever the hell it wants to be. So again, with us losing a bunch of open interest from shorts that lost $1.7 billion today, pour some out for those guys. we could grind here for a little bit. We could maybe even go down because, again, I showed you an image where the longs are paying the shorts. So we could actually grind here for a little while. I'm okay with that. I think fintech's going to do well. And as fintech's doing well, I'm going to benefit from that by buying any dips that come up inside of Bitcoin and the miners. And that's the goal. Now, the other thing I wanted to point out is this right here. This is the Google Trends. This shows that there is no interest in Bitcoin. Now, the last rally, I think, got neutered. I think we would have went a lot higher, except the Fed aggressively raised rates at the fastest rate in history. Since the 80s, I don't know. There's dispute on exactly the rate of it and how long it went back. But again, so we could have been up here again. So this is nothing. Where we're at is nothing. It should be, we have a much bigger network and an audience and a narrative behind us right now. So the chance that we go much, much higher in interest than we even saw in 2017 is likely. That's what should have happened last time. If you look back here, look at the last cycle in 2013, it's like dust. And then you go back even further and it's the same thing. So we should see really massive open interest coming for Bitcoin. So I just wanted to talk to that point. Now, let me see. That's my numbers. You don't care about my numbers. Let me do this. I want to pull up. Yeah, I'll start with this. I'll start with this, actually. All right. So real fast. I'm going to pull this up, roll through a couple of my favorite charts, and then we're going to look and see what we can find out from Mara. Mara is not doing great. It's not doing horrible. It's down about 1%, 0.5%. Nothing too exciting going on there. Real quickly. So let's just roll through some other stuff. Look at charts, and then we'll get to the Mara stuff. And thank you, Connor, for joining. Appreciate it, man. All the support. Really appreciate it. Yep, almost back to even. I don't know what brought it down. Let me do this real quick while we're here. Just real fast. Let me just do a search and see initially what Mara results are, and then we'll get back to looking at all the other charts before we do a deeper dive into Mara. Here's Urkel. Good stuff. All right, does anybody actually have the earnings number? Let me go here. Latest. Press release posted 405. All right, I'm going to let other people dig through that. I don't see anything clear. So we'll come back to it in a second. I want to focus on charts. All right, so let's get through this, and then we'll get to that. Now, SoFi went down 3.1%. It's down like 4%. The market was kind of having a down day. I'm actually not worried about this at all. I think we could find, worst case, we find a support at the 850s range because we have all this volume underneath of us. I would love for us to get above the .786 around 950 and then turn that into support because, again, then everything is underneath of us. So ideally, that's what happens. All right, next. Let's look at Square. Square was a champ today. Again, I fed off of Square and Hood because they were kind to me today and made me a bunch of money, at least in my calls. So this one was up 1%. This is cool. I think I made like 8 to 10% off the calls. We're still above support. We haven't closed this daily gap that you can see in this box here. That could happen. Maybe we could have some down days. We're overdue for them, man. Like, we've had some really... I'm still up almost 400,000 this week. We've had a good time. So... And I'm at all-time highs in my balance, or at least I was yesterday or this morning. So I don't know. Like, it wouldn't be the end of the world if we drop a little bit with Square and some of these others too. Real quickly, let's see how our boy. Oh, I don't want to do it that way. Let's see how PayPal did. You guys talk amongst yourselves here. I'll be posting stuff, and then I'll be checking chat in a little bit. How are we doing on Mara? Mara's still down. Okay, so Mara didn't do so good. That's interesting. All right, let me see here. So PayPal was up 0.15%. I love that. I love that it's trending in this little zone right here. I'd love to see it get above the 200 moving average at 61.52 and then turn that into support because that's peak volumes. So that would be sweet. And I think it's going to do that. I think the narrative is going to be very different for PayPal here in the days ahead. Why do I think that? Because they set for no growth whatsoever. No growth whatsoever. We like that. Very low expectations. And they get a lot of low-hanging fruit that can help them out. Whoa, 500 and something people. This is awesome. New record. Thank you guys. We'll be here talking about Mara more in a second. I'm just rolling through a few other charts real quick. It's kind of what we do. Plus, Mara doesn't officially have their call until like 4 Central Time, so we'll have plenty of time to look at it. All right. Hood down 0.74%, but again, it's been flying. I sold some today, probably like flat on the day. But when you've made 250+% off of something and you can use it to buy Bitcoin miners down 10 to 14%, I say you do it. And that's what I did. I still have a bunch of it, but I had a little fun. I'm going to take this other one off. It seems too tiny. So again, my ultimate target, I'm going to be 100% out of this one probably around 30, 31. I just want that fib. That gets me about $1 million in gains in total. All right. Let me see here. Okay. All right, real quickly, let's check out ArcG and a few others, and then I'll start rolling through your guys' list. Oh, and I got to pull up Tesla. Tesla did good today. Up 1.16%. Love that. It's the little engine that could. So ArcG, again, is so far finding support above the 100 moving average on the weekly and peak volumes going back to the beginning of time. I would love to see it stay right here at 31.86 roughly and find support maybe like 32 and then go higher. Again, I want to get above 35.50 right around that range because then we have this downward trend that's a year and a half old behind us and we have a lot of real estate all the way up until the 47 mark. And I mean, I'll be like 75% out, maybe 80% out of my options play at that time. All right, let me see what else we got. Tesla. Hey, thanks, Chill. Thanks for joining, man. Appreciate all the support. I really do, guys. Means a lot to me. All right, so Tesla could be faking us out. Could be, right? This looks like it could be a bear flag, and I really hope it is. I'm still hoping, as people know who watch this daily, I want it to be. I want it to go down here because I want to buy more. But if it doesn't, I've got like 160, 170K in calls. They go out 2.5 years almost. So I'm not too worried about it. But gosh, wouldn't it be great if it went to 169? Give me a bunch more. Get to that .618 and then just break up. Do some crazy stuff like I know you will. All right, real quickly. I should probably pull up my Bitcoins. Why didn't I pull up my Bitcoins? What am I thinking, man? All right. So a couple things to note. One, real quickly on Bitcoin. If we close above 61.5 or 61.3 tomorrow, it's right around that number, 61.5. Then we will have the highest monthly close in Bitcoin's history. That would be cool. That's a good thing to note. All right, let's look at some other stuff. So again, on the 4 hour, I'll just jump to the 4 here. We got the spinning doji top up here. Again, another sign that we're probably taking a breather. It's just like equal on both sides almost. So I could see maybe a trend down to here around the 58 range. I'll be a heavy buyer of everything in that range. Everything. Because we have, look at the volume shelf we have there. It's decent. If I zoom out, it doesn't look as big, but here, I'll go way out. I'll go to the weekly time frame so you can get a better gauge. So again, really decent volume shelf, like at that 57.5-ish range. So I like that as an area of support. I'll definitely be a strong buyer in that range. Hey, Adam. What's up, dude? All right. Let's see here. What else we want to pull up? Ethereum, I think, is just going to explode, guys. Let me pull that up real quick. Ethereum has all the marks of exploding, especially if Bitcoin starts to chop. This is the time when altcoins get crazy, guys. Now, it looks like it's got this top, right? It looks like this top. It's kind of weird with the line here. I don't even know why I have vertical lines on this. Strange. What is this? GDP growth rate. Oh, okay, weird. It's showing me the economic stuff in here. Strange, whatever. But you can see how we had this top up here and we've wicked down pretty hard. Maybe we trend for a little bit, but here's what happens in Bitcoin bull markets that you need to understand. When we have really powerful moves to the upside that show that there's a ton of strength behind Bitcoin and this network, it will table off and it will chop for a while. Might even go down a little bit, but it will be relatively stable. While it's relatively stable, everybody takes an opportunity to flood into altcoins, and Ethereum is heavily overdue. There's the Ethereum ETF, and there's the fact that it's deflationary. So this thing's going to be a bottle rocket. Just wait. All right. And Solana's up 5% today. It's rocking and rolling. Like, this is just all good. Look at this. It wants to get back up to this next fib level and go higher. It just does. So once this gets past 123, it's off to the races on the next .618 at 234. And you can expect it. And then the gaps just get crazier. And this will be coming. Not sure if it comes right away, but it's coming. All right, let me show some other stuff here. I'll show you the crypto bubbles real quickly in the daily. So as you can see, dog coins are still doing okay. Can't be a total risk-off market, can it? Look at some of this stuff. We've still got some creepers. Peep, another shit coin. We still got ones creeping higher. And if you look at the week or the month, they don't look weak at all. And these, if anything, should get more powerful. Because, again, that's how it works. All right, let me see here. I'm probably going to go through chat now. Let me see if we can actually... I want to see if Mara's actually got their earnings out. 1 second here. I got to go back. Okay, here we are. Got the conference call. No. 1 second here. Just making sure... Early presentation is not available yet. Okay, so it's still waiting. Let me see if there's any docs. Marathon, press release, 22nd, 28th. Ah, okay, here we go. Let me see. Pretty boring press release. Forward-looking statements, yada, yada, yada. Let me see what else we have. Download it as PDF. 1 sec. Sorry, guys. I'm just looking through this to see if it's actually anything of substance. And I am new to Mara, so I'm trying to look. Yeah. Is that it? Is that the only thing they gave us? Marathon introduces Anduro, a new multi-chain Bitcoin Layer 2 network. What? What? Wait a second. What is this shit? Marathon Digital introduces Anduro, a new multi-chain Bitcoin Layer 2 network. 1 sec here, guys. I gotta read this. They're doing a shitcoin? What the fuck? Okay. Today revealed Anduro, a new multi-chain Layer 2 on Bitcoin aimed at accelerating Bitcoin development and adoption. While Bitcoin's decentralization, security, and popularity can be appealing for blockchain developers, the network's current functionality can pose challenges for developers who are looking to scale their blockchain applications. To encourage Bitcoin development and adoption, Marathon has been incubating Anduro, a new programmable Layer 2 network on Bitcoin. Anduro aims to serve as an application layer while strengthening the underlying incentives behind Bitcoin's proof of work. Anduro is a platform built on the Bitcoin network that allows the creation of multiple sidechains, providing a new avenue for innovation within the Bitcoin ecosystem. While Marathon has helped incubate Anduro, the network is intended to be community-led and community-driven. The network, God, this sounds like a shitcoin and a money grab. Anyway, just 1 sec, I'll read the rest. The network is designed to systematically integrate decentralized governance with a focus on becoming the most reliable, developer-centric Bitcoin Layer 2. Marathon is already developing the first two sidechains on Anduro, Coordinate and Alice, which can be further developed by open source contributors. These chains demonstrate Anduro's flexible programmability. Coordinate offers of cost-effective UTXO stack for the Ordinals community, whereas Alice is an Ethereum-compatible chain for institutional asset tokenization. This is an interesting take. Let me refresh here real quick. It looks like I lost my Mara. Huh. They're making the shit coins. That's interesting. I wouldn't have saw that coming. Now, the thing to note is like 95% of these are money grabs, right? They're like almost 100%. They're just ways to make money off of Bitcoin. So this is going to be interesting. As the largest publicly traded Bitcoin miner working to process Bitcoin transactions and secure the network, Marathon has vested interest in supporting innovation on the Bitcoin ecosystem. Also, if they've pre-mined any of this shit, they've got a vested interest in that case too, but we'll find out more. The call is going to be very interesting, which includes incubating as Marathon's growing technology, new source revenue, stacked by potentially introducing a new source of fee revenue. Okay. For who? You? Beyond that, by extending the functionality of Bitcoin, Andro may be able to increase Bitcoin's adoption. And if Bitcoin flourishes, so do we. Yes, you do. We believe in testing, iterating, and letting the market decide what ideas succeed. We believe Andro is one of those ideas that provides value to Bitcoin holders and application developers, all while reinforcing the long-run sustainability of Bitcoin's proof-of-work network. To read the full white paper, I don't know if we're going to read all this. I probably will later, but I just want to look at it. Bitcoin pegged native assets blocks produced via Bitcoin proof of network. I am not a robot. Wow, that's all I get. This is it. This is it. Is this it? Okay. Oh, we do have more. Okay. All right. Let me change this real quick. This is probably going to be more than you guys want to know. Okay. All right. I'm going to dig more into this later. I don't know that I'm going to go into the whole, but this is a spin, right? This is a heck of a spin. Let me see here real quick. Oh, we don't have the after hours. Let me change this. There we go. There's Mara's after hours. Huh. And it's up now. This is interesting. Gosh, this is interesting. I got to see what these side chains look like and get a better bead. This is pretty rudimentary stuff here. Doesn't give us a ton of detail. Oh, maybe it... Okay, so I probably just need to read this. I don't know how interesting it is. I'm going to hop real quickly. I'm going to hop over real fast. Oh, so Mara's going up now. Maybe we will go through this whole doc. I do want to jump real quickly. I forgot to go over to Okta. So I want to pull that up because I got a bunch of money in that. And these guys are screaming higher. So this is going to be very kind tomorrow from the looks of it because it's already up to 103. Oh, yeah, that's a beautiful one. So this is that security company that I was talking about the other day that I got options and I added more to. And the reason I did that was they looked like they were set up to go higher. And all they needed was good quarterly earnings to be able to do that. And so now we're already, gosh, we already jumped all the way up here to 109. So almost to this next fib level. Looks like it's retraced a little bit, but it went up 18. It's still up 18% right now. Looks like it was up almost 30. So this is very fascinating. Let me see real quickly if I can pull up Okta or Mara here yet. It might be too soon. Nope, still Q3 here. So I might actually have to go and pull up Q4. 1 second here. Let me see if Mara is updated. And again, I don't know. I don't even know how much they've given us off of Mara. I couldn't find any more documents. Let me do this. So that's probably not providing a lot of insight right now. Let me go here. I want to see if I can find... So Okta's doing great. Okta's probably getting near resistance. I want to see what their earnings look like. I'm trying to see if I can see any more details. Maybe somebody sees something that I don't on Mara. No. Is that all they gave us? Oh, massive beat. Here we go. Here we go. Okay, sweet. Let's read this. Let's can we zoom in here? Yeah, there we go. All right, revenues increased 229% to a record 388 million. Net income 261 million. Or that's beautiful. This is great. The FASB accounting rules help these guys, so this is great. Yeah, this will end up being good. I wonder why they dove so hard. You know what? Maybe they were doing an ATM or something, and yeah, who knows? Maybe they were selling into it. Let's see here, though. Energized hash rate to 24.7%. Yeah, okay. And they were down. They're actually, for anybody who doesn't know, these guys are probably taking a hit in Q1 just because they had like 40% of their facility or hash rate off for like half the quarter. So they'll get hit a little bit in Q1, but like I said yesterday, Q4 is probably going to be good for them. Bitcoin production increased by 210% to a record 12,852. What's their HODL stack? That's what I care about. HODL stack, where you at? Did I miss it? Let me find it here. Where are you? Hold. Oh, they don't have it on here? All right. Am I tripping? Do you guys see it? Entered an agreement to acquire two. Okay, let's read this too. Entered an agreement to acquire two data centers, increasing mining portfolio to more than 900 megawatts of capacity, 45% of which resides on sites now directly owned by the company. See, that's good. For a long time, I didn't like these guys. I still think they're sketchy. I'm not going to go into all the reasons why. Read the short report and other stuff. But I will say that a couple of things that I haven't liked about this company. One of them was that they didn't have control over their own facilities, and I thought that was a stupid idea. So I'm happy that 45% reside directly owned by the company now. That actually makes a ton of sense. Let's compare some of these numbers. So even though the other one isn't updated yet, let's look. So revenues, 388 million, net income, 261. That's for all of 2023. So let's look at that here. So we'll go to Marathon yearly. So previous revenues, 2022 was 117 million, and we're in the 300s now. Oh, that ain't it. Let me see here. There we go. Why am I doing this? Really sucking with my navigation skills. Sorry, guys. Yeah, so we had 388 million in revenue versus 2022, which was 117. And you can see how these guys were drowning in debt in 2022, but they've made all of that better. So now their debt has plummeted. It's still high, but they have so much in the way of Bitcoin. So Bitcoin holdings previously were at 369 million. Let's see, did that say Bitcoin production? It just shows production, but I don't know that I see the holdings in here. Yeah, I don't see it for some reason. It must be in something else. But I mean, I think I'm looking at all three of their documents. But anyway, so that's probably went up because I know they bought Bitcoin too, and they've mined a bunch. So these numbers are going to be even higher, and that's why they did so well. And look at what the Bitcoin price has done, guys. I don't like Mara, but they're probably still going to do good. Now it's negative, not sure why. They're probably still going to do good, and you know why? Because this is at the end of Q4, and Bitcoin's price is so much higher than it was then. So, and they've got the FASB rules working on their side. So what was Bitcoin at the end of December here? It was close to 43,000, and now it's 60. So it's had like a 40% increase over that time. And then by the time this quarter ends, I don't think it's insane that we could be at 90,000 Bitcoin. So their balance sheet is going to look better and better, and their profits are going to look better and better. So this is going to turn out good for them, honestly. And I'll have to remember, I'll have to get a priority on this one to make sure that this one is updated next time that we do have the earnings call, because it looks like it's not yet. But these numbers are huge. All of it's huge. Installed, like if you look here, energized was 19.1 exahash in Q3 of 2023. Let's look over here. Energized hash rate is 24.7. What do we have there? 19. So again, they're just growing. They'll probably be at 30 here soon. So it's only getting better. They've actually, as much as I don't like them, they've done a good job. And their revenue growth year over year is just going to be stupid. This number is probably like, I mean, it's like up here. It's like up here. What do we have for Bitcoin mined? 41.44 for the quarter, right? So here, oh, I'm sorry. Here we had 34.90. So now we're up here. So you can see the general trend here. These guys have done well. Now they're going to have some older equipment, and the halving is going to make them less profitable, but they're spinning up a lot of new hash too. So they might still be all right. Mara dumping now? Oh, they totally could be. They totally could be. That wouldn't be surprising. If they were smart, they would have been dumping earlier today. I think, I got to say too, guys, I think CleanSpark was dumping today. I think they might have been dumping yesterday too. Let me do this. Yeah, look, Solana's just going even higher. It doesn't care about any of this stuff right now. Ethereum's kind of in the same boat. Let me pull up CleanSpark real quick as a comparison here. And then I'm going to minimize my window because I want to go over here to this call and make sure that I don't miss the starting bell. I guess we got 20 minutes still. All right, so CleanSpark. Again, I was kind of selling at, people were asking me like, well, first off, everybody asked this question. Why did CleanSpark go down on a day when Bitcoin went up? Okay, so I'm going to tell you why. It's because it went up 265% in 6 weeks when Bitcoin went up 50%. 265 is a much bigger number than 50%. So this acted as a 5x multiplier almost to the underlying. So you got to be, I don't know, you got to be pretty happy. Actually, it was over 5x. You got to be pretty happy with those returns. And you have to realize why people were like, Jesse, why are you selling the miners right now if you think it could go higher? It's like, why was I doing that? I was doing that because we had went up 265% and I take a little bit off the table. It's just what I do. Like, again, I was buying a bunch down here. Of course, I'm going to sell some up here, just like I sold some up here when I was buying back down here, right? Like, that's what you try and do. And you don't do it all. And I do it very minimally. Honestly, I don't do it that much because Bitcoin will surprise you to the upside. And I think people that haven't realized that, maybe that are new to this, maybe now you can realize that Bitcoin will surprise to the upside just like it did today when it hit 64,000. Now, when it drops 14% off of that, actually more than that now, you start for CLSK, you start buying. You start buying on the down days. You don't complain about not being able to get a good entry on the up days and then ignore 23% worth of a drop on the down days. You don't do that. Okay? If you're going to complain about not getting a good entry up here, then when it drops 23%, what should you do? Probably buy some. That's my take. Oh, by the way, this is not financial advice for all the new people that are here. I am not a financial advisor. I'm a high school dropout. There's a little blurb down at the bottom. It says that I'm a high school dropout who wants to be a macroeconomist someday when he grows up. And that is my goal. So I'm shooting for it. But again, you know your own life circumstances. You decide what you do with your time and your money. I do not. Visual Stocks. Yes, visualstocks.com is a great site. It's normally really updated, so apologize that the numbers aren't here today. That's something I can check with Alejandro on it. But yeah, it's a great site. It's my favorite site for looking at visual, like stock information visually. Between the key data that he has on the miners, between the estimates that show forward guidance, the ratios, it's got everything. And I don't make anything from this. I'm in no way affiliated with Alejandro outside of really liking the dude. He's awesome. He's added a bunch of stuff for me just based on my input. Some of the stuff he's done in like a day. He's just insane. And look at this. You got short interest. You've got the website. You've got headquarters. You've got employees. You've got recent news information. You've got ownership breakdown. You can see the stakes of institutions over here. I mean, it's really cool. You can even make your own charts in here. Mara numbers are out, yes, and they were good. I'll show them here in a second again. And then also the earnings calendar is great. I love it. I look at this routinely in the weekly view. You can like sort it by the things that you follow to popularity, whatever, the largest cap. So it's a really cool way of visualizing information. And normally it's really quick and updated too. So again, it's just not this time, but it normally is. No, here's the Mara results, and they're good. And we have the conference call in 15 minutes. I'll just gloss over it again. They broke records in everything. They have a huge Bitcoin stash. I like the fact that they have institutional ownership where they're starting to host their own mining facilities. Almost half of their mining facilities will be their own. I think that's great. There's just some things with the company that I haven't liked over the years, and on form filings that haven't been done when they should be. And then there's short report from a year ago with Mara. But outside of that stuff, they have done some things right. They've got a wicked stash of Bitcoin, the highest and largest in the industry. And then at the same time, on top of having the largest amount of Bitcoin, they also have currently like one of the highest hash rates, if you ignore cores, which you should, because they went bankrupt because they mismanaged their shit so bad. And they have 0 Bitcoin now. And so they can't benefit from FASB. And they've got all this old crappy equipment. And so their hash rate is going to be pretty unvaluable here soon. I don't even know if they'll make it personally. I mean, maybe they will, but I don't like them. But yeah, so Mara is better off than they are, I think. At least they didn't go bankrupt already. Other stuff going on with Mara, though. Mara is now creating cryptocurrency side chain. That's new. There's actually going to be 2 side chains based off of one currency called Andro, which is a layer 2 solution for the Bitcoin network. One of them will integrate with more Bitcoin functionality, and the other one will be tying into Ethereum. I don't know. This is weird. This is the kind of stuff that you see people do sometimes when they're trying to make a lot of money. Now, it might be a super smart business decision. It's just how reputable is it? How much does it muddy the waters with the U.S. government and Bitcoin miners? I don't know. It could get weird, but it might be a massive benefit for them. I'm really curious why they're down 8.44% in after hours. I am not seeing anything from earnings outside of this whole creating a side crypto thing. Maybe that's what people don't like. Maybe that's not going over really well. It's possible. Here, I'm going to read through this real quick. This might be boring. So if it's boring, just, mute for a little bit. And then we'll have the earnings call spinning up in 15 minutes. But I do want to check this out real fast and see what this is all about. Also, real quickly, with other miners, CleanSpark down 1.38% after hours. Bitfarms up 0.32%. MicroStrategy closed up 10.5% today. Before I jump into this, I need to talk to that. So that is a big deal. People don't realize it yet, but this is a big deal. This is brewing here. These gaps that we're seeing are going to destroy shorts that are shorting MicroStrategy right now. This is very important. This is very, very important. Why? Because as they get destroyed, it pushes this higher. Short interest, it says here, is 20%. 20%. 20%. The price for MicroStrategy, and ignore the debt on them, it doesn't matter because it's all Bitcoin debt, and their terms are stupid. In some cases, like 0% for 5 years. It's ridiculous. But the sheer power, let me see here, where there we are. The reason this has went from where we were 2 weeks ago at 480 all the way up to 1,000 for something that's supposed to be a Bitcoin ETF is because idiots are shorting this stock and they're driving it massively higher. This is like, it's not GameStop stuff, but man, it could do really well if people are stupid enough to keep piling onto this. Now, what's fascinating about it is I can tell you the playbook from Michael Saylor. He will ride these fucking idiots all the way up, and then he'll issue a bunch of shares, and then he'll use those shares to buy Bitcoin. This is like a perpetual money printer here. Originally, I was saying that maybe the MicroStrategy ETF does 1.2 to 1.3x. Maybe it does more than that, because this is insane. As long as these people are stupid enough to short this and to keep driving the price higher, I don't know how high it can get. I mean, the market is down today. Look at all these Bitcoin miners getting crushed. Down, 10+% in 24 hours. 25, 30% for some of them in the last 24 to 36 hours. And you've got MicroStrategy going up like a rocket ship. So this is going to be fun. You're going to see Michael Saylor post maybe tomorrow that MicroStrategy just acquired a bunch more Bitcoin. I don't understand why people are stupid enough to short this. It blows my mind. I don't get it. All right. Yeah, and you pay no fee with MicroStrategy. Originally, I thought that might be a concern because you can have an issue where this becomes disattached from the amount of Bitcoin they hold, but I really don't think that becomes a concern until after this cycle is over and we're in a bear market. Then you could have that issue that we have with GBTC, maybe not as bad, because Michael Saylor is brilliant in the way he's constructed all of this. His liquidation point is like 3,400 Bitcoin. I mean, good luck with that. Good luck liquidating him. But I could see this doing really well, and I don't see it dropping as low as what Grayscale did. Grayscale had a discount of like 50% versus their Bitcoin holdings. That's horrible. But people that owned Grayscale benefited from that upside because they knew it was coming back and they knew the Bitcoin ETF was coming. So like people like myself did really well on that. But if there are concerns from me with MicroStrategy, it's probably going to be in the bear. It's not going to be now. And in the bear, if this thing was discounted at 20% their holdings or 25 or something stupid, I would buy the crap out of that. I will too. But again, that's years out. We don't care about that right now. All right. Let's get back to it here. So we were going to talk about this paper. Mara's new shitcoin. Let's read about it. Overview. You know what? I don't want to read. Let's have this do it.
Ashu Swami, CTO Michael Casey, Director of Engineering Julian Duran, Product Lead Enduro. Table of Contents 1.
Nope.
1 Overview. Enduro is a multi-chain, Bitcoin Layer 2 network built to revolutionize the future of blockchain innovation and sustain the long-term incentives of Bitcoin proof of work. All Enduro sidechains are merge-mined with Bitcoin-pegged native assets, making this the industry's most Bitcoin-native Layer 2. Governance happens via a diverse consortium of Bitcoin-forward entities known as the Collective, which will be phased out once trustless alternatives reach production readiness.
They're going to be in control.
Ultimately, Enduro is built to carve out a new path for blockchain adoption. Instead of borrowing narratives from other networks, Enduro is launching with 2 permissionless chains, Coordinate and Allies, that further use cases which uniquely demand Bitcoin's appeal and security. Coordinate is a UTXO chain with native asset issuance and other protocol-level innovations to help scale ordinals. Allies is an Ethereum-compatible chain geared toward issuing and trading tokenized real-world assets. Future chains are underway. Two-purpose blockchain application innovators need Bitcoin.
More?
Crypto scandals have made the mainstream skeptical about blockchain, yet top applications continue to be built on networks with obscure tokens, software vulnerabilities, and regulatory uncertainty. Bitcoin with its global brand, decade-long security, and commodity-like features has the potential to help innovators preempt skepticism, avoid risky dependencies, and focus on real-world value generation. Bitcoin, for its part, can benefit by attracting application innovators. Bitcoin's consensus, proof of work, POW, incentivizes miners via a profit motive in the form of block subsidies and transaction fees. However, block subsidies have approximately every 4 years. Facing reduced mining revenues, some miners may be disincentivized from securing Bitcoin. To sustain miners' long-term incentives, attracting innovators, and increasing transaction volumes via Bitcoin application layers is essential. Unfortunately, Bitcoin lacks a robust and incentive-compatible application layer. Tinkering with the lean-by-design Bitcoin main chain is infeasible, leaving Layer 2s and side chains as the only channels for growing the pool of application innovators. Today's Bitcoin Layer 2s and side chains, however, are failing to gain traction, as evidenced by the distribution of open-source blockchain talent 1 and venture capital investments 2. Bitcoin Layer 2s and side chains are also rarely Bitcoin compatible, as few involve POW and many feature Bitcoin agnostic native assets. Enduro was founded to create a proper Bitcoin application layer. The incentives underlying Enduro are natively tied to Bitcoin's main chain, eliminating the potential for a closed native asset presale or an opportunistic, untested consensus model. Anduro founders,
2x it sounds
in
almost
fact, only benefit from transaction volumes, thereby linking the network's success to tangible adoption. Application developers will, at last, have a reliable and accessible stack for integrating Bitcoin's appeal and credibility. The result will be a plethora of next-generation blockchain applications backed by a more robust Bitcoin main chain. Figure 1. The relationship between Anduro innovation and Bitcoin. Anduro blockchain innovation. Bitcoin transaction fees for miners. Bitcoin appeal and credibility. Transaction volume. BTC asset and proof of work. 3. Network. Anduro is a multi-sided chain network built on top of Bitcoin. There are 3 key components to Anduro: the collective, the side chains, and the side chain native assets. The collective administers the main chain peg, thereby linking the value of Anduro BTC 1:1 with BTC. BTC must be locked on the main chain to mint Anduro BTC, and Anduro BTC must be burned on a side chain to unlock main chain BTC. The collective also participates in Anduro's sidechain consensus by signing periodic blocks to promote MEV resistance and fast finality.
It's going to be interesting to see how the software community attacks this and what they think of it. And what, when we get more technicals in relation to it, I don't know. This is going to be
the real engine behind Anduro's sidechain block production, however, is Bitcoin mining. Bitcoin miners simultaneously create blocks for Anduro and Bitcoin, winning Bitcoin-denominated rewards from both networks. Figure 2. Anduro's network design. Anduro collective 1:1 native asset peg. MEV resistance, fast finality. Proof of work. Transaction fees, block rewards. Transaction fees. Bitcoin miners. Anduro sidechains. Anduro BTC. Bitcoin main chain BTC. Principle 1. Anduro sidechains are designed to be the world's most Bitcoin native Layer 2 networks. Anduro chains feature Bitcoin pegged native assets and POW-produced blocks to avoid inorganic activity. Chains that create new native assets invite regulatory scrutiny. 3. Dissuade institutional adoption, feature pre-sale or pre-mine events that create narrow groups of insiders, and are dominated by speculators with no real use for the underlying blockchain. Meanwhile, free rider problems abound when Layer 2 networks do not pay the Bitcoin main chain for leveraging its appeal and security. If the drivers behind consensus are only nominally tied to Bitcoin's decentralized profit motive, a Bitcoin Layer 2's appeal, sustainability, and resilience are questionable at best. Embedding Bitcoin and POW at the center of Anduro is also strategic.
God, I just gotta see how this
Application
works.
developers can already choose from a variety of blockchains. What differentiates Bitcoin application layers is their link to Bitcoin's appeal and security. Just as fintech companies innovate payments without reinventing national currencies, Anduro improves Bitcoin's usability without undermining its core characteristics. Principle 2. Anduro leverages production-ready governance tools at launch. Trustless implementations will be adopted once they reach production readiness. There is no trustless way to peg an asset to Bitcoin or to ensure faster finality and MEV resistance on a side chain. As a result, a group of Bitcoin forward entities is being recruited to create the collective, Anduro's governing body. There are 2 types of members. Up to 15 will start as functionaries and upwards of 50 as contributors, but neither number is fixed. Functionaries independently run hardware to attest to main chain peg transactions, sign periodic blocks that prevent reorgs and transaction reordering, reach
Sorry, I know this
consensus
is super
via
boring,
quorum
listening
or
to
round
robot.
robin, depending
should
on the
start in about
chain,
3 minutes.
and vote on governance matters. Contributors, alternatively, form part of governance discussions and help lead Anduro's marketing. Collective operations are open to all members and all procedures are written out in a charter signed during onboarding. To maximize functional decentralization, the collective is designed to be diverse and dependent on Bitcoin miners. Collective members will be spread across the world and operate in diverse verticals.
It's out.
Some examples include Bitcoin
All right, we're
thought.
taking a breather here. And checking. Were you talking about Mara, Chris? I guess we'll find out. Yeah, okay, cool. It's already updated. Sweet. Yeah, I was going to say, it usually gets updated pretty quick. So you can see Bitcoin production. You can see it's just a steady increase. Revenue was more than steady. I mean, this is beautiful from a chart perspective. This is what you want to see. You can see Q4 net income looking great. You can see their cash being higher than their debt for the first time in a very, very long time. Lots of share dilution. So if you were wondering why Mara, they missed an EPS. If you were wondering why Mara too has maybe not been outperforming after having just a crazy run, probably going to be share dilution, right? Operating expenses have jumped a lot, so that's going to be interesting. Total cost Bitcoin mined, not crazy, still low numbers. We like that. Let's look at, let's see what else we got up here. Bitcoin produced per day is a huge number. Holdings, there we go. Look at that. $639 million in Bitcoin holdings. The FASBA rules helped them immensely. And look over here. Look at their operating leverage over here. Look at the revenue versus expense. That's looking really good. Let's see. What did you say? EPS. EPS here shows 0.67, but I don't know what the guide was on it. Let me see. Must not have been that. But again, this looks good. This looks good. For it to be down 7%, I don't know. The only thing I'm really sketched out about is the new shit coins, the new side chain. That's odd to me. I don't know what to think about that. I really don't. Hopefully. Yeah, so we're up to 24 now. We'll probably be at about 30 by next quarter. But again, next quarter, did they have it in their guidance here? So they're still showing an increase in Q1 for revenue. I think that's probably partially Bitcoin price appreciation. And their EPS will be a lot better too. They'll benefit from that stuff alone, even though they had an outage. Mara Pool, just to show you guys this, you can see where they went from 29 exahash or something, crashed down to 8. Just like horrible numbers. And so they had a really rough, like, the end of Q4, it looks like. No, it was really Q1. Q1 numbers are weak. So I think they're just going to get lucky because of all that appreciation that comes out from Bitcoin. That's probably a lot of what their revenue guidance is just that. Or they're turning on a lot of miners real quick. And again, this thing is so weird. It's like this is the main pool for Mara. I don't know if all the hash is supposed to be on it now, but it only shows 16 when they're saying they're at like, what, 24? I don't understand why this thing doesn't update more often. I don't get it. Let me go back over here. So again, call should be starting here in a minute. I'm just waiting for it to spin up. Just music right now. Oh, it says please wait 1 second here. Oh, I do love that HODL chart of Bitcoin. I do love that. Nothing yet. Yeah, that's beautiful, man. That's just so well done. Let me look here too. How is Okta doing? Let's see how my baby's doing here. Ethereum. There we go. Oh, 20%. I'm going to make so much money off of that. For any of you guys that are in Okta, congrats. That's going to end up being a winning play. Probably have to sell some of that tomorrow. And what am I going to do with that money? I'm going to buy me some Bitcoin miners. That's what I'm going to do. Oh, hey, I think we might be starting.
Good day, ladies and gentlemen. Welcome to Marathon Digital Holdings' fourth quarter and fiscal year 2023 earnings webcast and conference call.
I'm going to mute here while we do this, guys.
I'd now like to turn the call over to your host, Charlie Schumacher, Vice President of Corporate Communications. Please go ahead, Charlie.
Thank you, Kevin. Good afternoon, and welcome to Marathon Digital Holdings' fourth quarter and fiscal year 2023 earnings call. Thank you for joining us for our call today. With me on today's call are Chairman and Chief Executive Officer Fred Thiel and our Chief Financial Officer Salman Khan. Before we get started, I'd like to remind everyone that our prepared remarks may contain forward-looking statements and that we may make additional forward-looking statements during the question and answer session. These forward-looking statements are subject to risks and uncertainties, and actual results may differ materially. When used in this call, the words anticipate, could, enable, estimate, intend, expect, believe, potential, will, should, project, and similar expressions as they relate to Marathon Digital Holdings are, as such, a forward-looking statement. Please refer to our earnings release for a full recitation of our forward-looking statements. Investors are cautioned that all forward-looking statements involve risks and uncertainties, which may cause actual results to differ materially from those anticipated by Marathon at this time. Some of these risks and uncertainties are more fully described in Marathon's public filings with the U.S. Securities and Exchange Commission, which can be viewed at www.sec.gov and ir.mara.com. Finally, please note that on today's call, we will refer to certain financial measures that were not prepared in accordance with generally accepted accounting principles in the United States, including adjusted EBITDA and non-GAAP total margin. Marathon believes these non-GAAP financial measures are important indicators of its operating performance because they exclude certain items that are unrelated to and may not be indicative of its GAAP financial results. Please refer to our company's periodic reports on Form 10-K and 10-Q and to our website for a full reconciliation of these non-GAAP performance measures to the most comparable GAAP financial measures. We'll begin today's call with prepared remarks from Fred and Salman. After their comments, we will be going through some of the more popular questions from our investors before transferring to a live Q&A with our covering analysts. And with that out of the way, I'm going to turn the call over to Fred to kick things off. Fred?
Thank you, Charlie. We had two primary objectives for 2023, which we outlined on our first quarter earnings call last year. The first was to energize our previously purchased mining rigs to reach our target of 23 exahash. And the second was to optimize our performance to become more effective and more efficient. As the record operational and financial results we published today clearly demonstrate, 2023 was an immensely successful year for Marathon, in which we achieved both of our primary objectives. Today, Marathon is one of the largest Bitcoin miners in North America, and whether it be financially, operationally, or technologically, we believe we are setting the pace for this industry. In 2023, we grew our hash rate 253% from 7 exahash to 24.7 exahash, surpassing our target of 23 exahash. At the end of last calendar year, we had over 210,000 Bitcoin miners operating across 11 different sites on 3 continents, which we believe makes us the largest and most diversified publicly traded miner today. At the same time, we became much more efficient at converting energy into economic value, which is the heart of what we do. During the year, we improved our fleet's efficiency 21% from 30.9 joules per terahash to 24.5 joules per terahash, which means that on top of our scale and our diversified operations, we have one of the most efficient fleets in the industry. Our operations team dedicated significant efforts to enhance the performance of our facilities. In August of 2023, our site in King Mountain only operated at an average of 51% of its operational capacity, and the site in Granbury only averaged 56% of its total capacity. Our team took charge of the situation, flying in to assess and address the issues, and by the end of 2023, our team had optimized both sites such that King Mountain operated an average of 92% of its capacity, and Granbury at an average of 99% of its capacity in December. While site performance will fluctuate with seasonality and maintenance, the significant improvements we made underscore the positive impact that our team and our processes can have in our operation, a testament that we are not just effective capital allocators, but excellent operators as well. Our operational expertise is one of the many reasons we are confident that we will be able to successfully integrate and ultimately optimize the 2 data centers we recently acquired from Generate Capital and any other sites we may acquire in the near or distant future. In 2023, the total Bitcoin network's hash rate experienced a significant increase, doubling from 253 exahash to 509 exahash. This increase in hash rate has the equivalent impact of a halving event. With hash rate doubling, difficulty essentially doubled, and that effectively reduced the reward for mining a block by half, holding all else constant. Meanwhile, Marathon grew more than twice as fast as the rest of the network as we increased our hash rate 253% last year. At the same time, we improved our operational efficiency, improving our fleet efficiency 21%. As a result, we produced a record amount of Bitcoin in 2023. We increased our Bitcoin production 210% year over year from 4,144 Bitcoin in 2022 to 12,852 Bitcoin in 2023. Production improved throughout the year, but the fourth quarter really stood out operationally and financially. By the end of the fourth quarter of 2023, we were operating near full strength after Garden City was fully energized in October, following several months of regulatory delays. In December, we averaged 90% capacity across all sites, and at the same time, we benefited from a huge surge in transaction fees on the Bitcoin network. In December 2023 alone, we produced 1,853 Bitcoin, with 380 Bitcoin, or 22% of our total production, coming from fees. As a result, we produced a record 4,242 Bitcoin in Q4. In Q4 2023 alone, we produced more Bitcoin than we did in all of 2022, and more Bitcoin than 3 of our top competitors combined. In addition to Q4's record Bitcoin production, we announced several new expansions at the end of last year that are indicative of how we see Marathon evolving. The first announcement was our inaugural pilot project powered by renewable off-grid energy from a landfill in Utah. Our team is still working on finalizing the data, but the preliminary results of this project demonstrate that Bitcoin miners can actually help reduce emissions. The data suggests that the model we helped pioneer of turning trash into cash by mining Bitcoin with stranded methane from landfills is economically viable for miners, for the landfill operator, and is more effective at reducing methane emissions than flaring. Following the landfill gas project in Utah, we also announced our second international expansion and our first deployment into Latin America. In Paraguay, we're working to convert 27 megawatts of unused hydropower into 1.1 exahash of Bitcoin mining capacity. By Marathon standards, this deployment is really just a large-scale pilot, and it serves as an excellent case study for the value that Bitcoin mining can bring to regions throughout the world with excess power. It also demonstrates our ability to replicate the joint venture model that we developed in Abu Dhabi, which allows us to partner with regional experts to quickly and effectively expand our diversified portfolio of Bitcoin mining assets. This experience is essential as we look to grow our footprint internationally and educate the world on the value that Bitcoin mining can bring as a technology solution to the energy sector. Perhaps the most significant announcement from last quarter was our $179 million acquisition of our first fully owned data centers in Kearney, Nebraska, and Granbury, Texas. The acquisition closed last month, and the purchase price was subject to customary closing adjustments. With this acquisition, Marathon transformed from a company with 584 megawatts of capacity, 3% of which we directly owned or operated, to one with 910 megawatts of capacity, 45% of which powers sites we directly own. We've already spoken about the strategic importance of owning these sites, of the accretive nature of this transaction, and of the opportunities we have to reduce our operational costs at these sites, so I'll refrain from going into detail today. We will be assuming full operation control of them by April 30th or earlier, allowing us to accelerate operational cost savings and optimization. While we're not yet the operators, our team is currently intently focused on engaging the local communities to ensure that we can be the best neighbors possible as we go through the transition process. We believe Bitcoin mining can positively change the world, and that starts with the local communities in which we operate, where our operations create highly skilled jobs and economic contributions for the people of those communities. Before going too far into our future plans, I'm going to turn the call over to Salman to discuss our financial results for the fourth quarter and fiscal year ended 2023. Salman?
Thank you, Fred. We had an excellent fourth quarter to cap off what was an incredibly successful year for Marathon. We produced record revenues, net income, and adjusted EBITDA, and we've entered 2024 with a strong balance sheet that has us well positioned for the upcoming halving and beyond. Now, let me dig into the details. The company reported net income attributable to common stockholders of approximately $152 million, or 62 cents per diluted common share in the quarter, compared to a net loss of approximately $392 million, or $3.13 per share in the prior year quarter. For the full year, we reported net income of $261 million, or $1.06 per diluted share, compared to a net loss of $694 million, or $6.12 per share in the prior year. In both the quarter and the year, the improvement in profitability was partially due to us choosing to early adopt the new FASB fair value accounting rules. Had the company not early adopted the new FASB fair value accounting rules, our net income attributable to common stockholders for fourth quarter of 2023 would have been a net loss of $5 million, or loss of 2 cents per diluted share, and net income of $33 million, or 17 cents per diluted share for the year ended December 31, 2023. I will discuss these changes and the impact in more detail shortly. But first, let's dive into mining results. Fourth quarter revenues were a record $157 million, significantly higher than prior year revenues of $28 million, and were driven by a 172% increase in Bitcoin production, coupled with a 101% higher average price of Bitcoin. For the full year, we recorded revenues of approximately $388 million, also a significant improvement compared to $118 million in the prior year. The improvement year over year was driven by a 210% increase in Bitcoin production and a 2% average price of Bitcoin in 2023 compared to 2022. It is important to note that in 2023, we benefited from the absence of a $333 million impairment of mining equipment and advances to vendors, a $183 million impairment of digital assets, an $85 million loss on digital assets held within the investment fund, and a $56 million impairment of deposits, loan, and investment due to vendor bankruptcy, partially offset by an $84 million gain on sale of equipment net of disposals in 2022. Our hosting and energy costs for the 3 months ended December 31 were $75 million compared to $30 million last year. For the year, hosting and energy costs were $223 million compared to $73 million in 2022. In both time periods, the increase was primarily due to growth in our mining fleet and related costs. Total cost of revenues, which includes depreciation and amortization, was $146 million in Q4 of 2023 compared to $44 million in Q4 of 2022, an increase of 235%. For the full year, this was $403 million, 166% from $151 million in 2022. Depreciation and amortization for the fourth quarter was $71 million, increasing by $57 million compared to the same period in the prior year. For the full year, depreciation and amortization was $180 million compared to $79 million in 2022. In both periods, the change was predominantly the result of growing our energized hash rate from 7 exahash to 24.7 exahash. We have also early adopted FASB's accounting for and disclosure of crypto assets, which actually requires the measurement of crypto assets at fair value. The adoption of new accounting guidance resulted in a cumulative effect adjustment at the beginning of 2023. In 2023, we increased our Bitcoin holdings 24% from 12,232 Bitcoin to 15,126. Because of the significant amount of Bitcoin we hold on our balance sheet, we recognized a gain on digital assets of $214 million during the fourth quarter of 2023, and a gain on digital assets of $331 million for the full year under this new accounting guidance. As one of the largest holders of Bitcoin among publicly traded companies, we expect the new fair value accounting of Bitcoin to continue to impact our bottom line going forward as the price of Bitcoin fluctuates. The company's non-GAAP total margin, excluding depreciation and amortization, was $82 million this quarter compared to a loss of $1 million in the same quarter last year.
Sorry, just real quick, look at Solana. This is set up so well.
Our non-GAAP total margin, excluding depreciation and amortization, was $164 million compared to $45 million in 2022. In both cases, the change was predominantly related to higher Bitcoin prices, increased production, and increased operational efficiency. In Q4 of
MicroStrategy's going up
2023,
after
adjusted
hours. Gotta
EBITDA
love it.
improved to $260 million versus a $374 million loss in the prior year period. For the full year, adjusted EBITDA improved to $420 million from a loss of $543 million in 2022. The drivers of the adjusted EBITDA improvement in both periods include total margin improvement, excluding depreciation and amortization, gains on digital assets, and the absence of impairment charges. Due to the impairment charges of $572 million in 2022, we had a gain of over $700 million, which had a positive impact to earnings when compared to last year. General and administrative expenses, excluding stock-based compensation, were $20.5 million in Q4 of 2023, compared to $13 million in the prior year period. For the fiscal year 2023, G&A excluding stock-based compensation was $63 million compared to $32 million in 2022. This increase in expenses was primarily due to the increasing scale of the business, including payroll and benefits, professional fees, and other costs. At the end of 2023, we had approximately 60 employees, up from 30 a year ago, and we continue to opportunistically add talent across the organization. Turning to our Bitcoin holdings and cash position, unrestricted cash and cash equivalents totaled $357 million at December 31, 2023, up $254 million compared to last year. Also at December 31, we held approximately 15,126 Bitcoin with a carrying value of $640 million on the balance sheet. The company's combined balance of unrestricted cash and cash equivalents and Bitcoin was approximately $1 billion as of December 31, 2023. We sold 2,365 Bitcoin during Q4 of 2023, realizing cash proceeds of $83 million. During the year, we sold 9,482 Bitcoin and realized cash proceeds of $264 million. These proceeds were utilized to fund operating expenses, including cost of revenues for energy hosting and other cash operating expenses. During the year, we generated $608 million from at-the-market equity sales, which we primarily intend to use for growth capital and other general corporate purposes. As previously discussed, during the year, we took advantage of an opportunity to strengthen our balance sheet by exchanging $417 million in convertible notes for approximately $329 million in equity. This transaction reduced our debt by 56% and saved approximately $101 million, or 55 cents per share, in cash for our stockholders. The combined cash and cash equivalents and Bitcoin on our balance sheet, along with reduced debt and access to at-the-market facility, provides us ample amount of liquidity and optionality to strategically evaluate opportunities as we approach halving. We believe the increased value of combined cash and Bitcoin, along with reduced debt, is prudent risk management and source of strength for the company's balance sheet as we enter a potentially turbulent time for the industry. As mentioned in our January production report, our unrestricted cash balance at January 31 was $319 million, and we held approximately 15,741 Bitcoin with a fair value of $670 million. In total, we had approximately $1 billion in unrestricted cash and Bitcoin at the end of January. We continue to actively manage and optimize our treasury by hedging portion of our Bitcoin holdings. The purpose is to mitigate the impacts of extreme volatility in the near term while maintaining the long-term strategy of maximizing the size and value of our treasury. Given Bitcoin's historical volatility, we believe this strategy is integral to improving the resilience of our organization, providing downside risk protection during volatile market conditions, and maximizing our Bitcoin valuation potential. We expect our Bitcoin holdings will generally increase but fluctuate depending on operating and market conditions. And again, Due to the significant amount of Bitcoin we hold on our balance sheet, we expect these fluctuations to continue to impact our bottom line with the adoption of the new accounting rules. We intend to add to our Bitcoin holdings primarily through our production activities, and we will also continue to sell Bitcoin as a means of generating cash to fund monthly operating costs and for general corporate purposes. Given our positive financial results and our robust balance sheet, we believe Marathon is well positioned to achieve our 2024 growth targets and to capitalize on any opportunities that present themselves around the upcoming halving. And that completes my update. I'll now turn it back to Fred, who will talk more about our operations and our ongoing plans.
Can you guys
Fred?
talk about the new cryptocurrency you just built?
Thanks, Salman.
Can we do
Those
that?
of you who have been tracking our pool will know that Q4's record performance was followed by temporary
Talk about
operational
that.
challenges in North Dakota and Texas that started in mid-January and have now been resolved. These sites, operated by Applied Digital, had unplanned outages due to transformer and transition line maintenance. In both instances, our team immediately began working with our hosting provider to find solutions to the issues, which are now resolved. As of this week, Ellendale is nearly back to full strength, and Garden City is re-energized.
How are we not
While these
talking
maintenance
about this?
issues are now resolved, we do currently expect Q4's record performance to outshine the first quarter of this year due to the prolonged impact. Regardless,
Maybe in
we're
the Q&A.
confident that the best and most exciting times for our operation are still to come. 1 year ago, the world was a very different place for Bitcoin miners and for Marathon. We were in a bear market with Bitcoin's price hovering around $23,000. Marathon itself represented less than 3% of the Bitcoin network with only 7 exahash online. We had 280 megawatt portfolio of Bitcoin mining assets, all based in the United States. We had $226 million of liquidity, and we carried $798 million of debt on our balance sheet. Today is a very different story. Bitcoin's price is hovering around 60,000. I had to strike out the 55,000 in my script because Bitcoin kept moving up in price today. Marathon represents approximately 5% of the Bitcoin network with over 26 exahash online and more coming. We have a 900 megawatt portfolio of Bitcoin mining assets diversified across 11 sites in 3 different continents. We have $1 billion of liquidity in our balance sheet and have reduced debt by over $411 million while saving our shareholders $100 million in the process, resulting in net debt of $331 million. We're integrating our first major acquisitions and taking direct control of nearly half of our hash rate, but we're only just getting started. In 2024, we plan to grow our operational hash rate more than 35% to approximately 35 to 37 exahash. By the end of 2025, we plan to be at 50 exahash, which is approximately double our current capacity. These targets are based on our current machine orders and pipeline. However, we believe there are opportunities to accelerate the timeline and realize these targets even sooner. So you may ask, how are we going to get there? To start, we have orders and options for machines that represent upwards of 45 additional exahash, with orders for 22 exahash of miners already placed and inbound with the option to add another 23 exahash of capacity. Additionally, Marathon's investment in Auradine has already begun to pay dividends by providing us with an additional avenue to increase hash rate at an accelerated pace. If we choose to execute on these orders, we have the potential to reach 69.7 exahash once energized. Since procuring machines is not a constraint on Marathon's growth, the obvious question is, where do we deploy the next 45 exahash of miners? The 2 sites we recently acquired are the first part of the answer. Granbury in particular has substantial expansion potential, which we've discussed in press releases and on our last call. But to meet our appetite for growth, we will need to do much more, which will consist of both organic and inorganic growth, domestically and internationally, with a focus on optimized cost to mine and a sustainable energy source. This is where our balance sheet comes into play. We have been building up a substantial stockpile of dry powder, now totaling over $1 billion between cash and Bitcoin, and we intend to utilize it to continue growing our business through organic and inorganic means as opportunities arise. So far in 2024, we have raised $489.3 million at an average share price of $19.82. As our 10-K will show, we have filed a new shelf giving us the option to raise an additional $1.5 billion via at-the-market equity offering.
Oof.
This would bring our total potential war chest to over $2.5 billion if it were fully exercised, the shelf that is. Today, the majority of our 900 megawatt Bitcoin mining portfolio predominantly consists of machines in large data centers that reside near power stations in the United States. We believe there exist significant opportunities to develop utility-scale mining operations based on stranded energy outside of the United States, like our UAE and Paraguay sites. We will look for more opportunities in places such as the Middle East, Africa, Latin America, and elsewhere. But our organization is evolving, and with it, we believe we can revolutionize the way people think about Bitcoin mining. Our long-term vision for Marathon is a diverse global organization that leverages Bitcoin mining technologies to build a more sustainable and inclusive future. Bitcoin miners excel at two things: consuming stranded energy and generating heat. And while most of our competition is focused on underutilized utility-scale grid energy, we are always asking ourselves, what is the best way to utilize our technology and its unique attributes to create the most value? We believe one of those is through Bitcoin mining's version of recycling, which basically means converting what is currently a waste product into a productive resource. The pilot project in Utah, where we converted methane gas generated from a landfill into a productive source of power for Bitcoin mining, is only one example. There are some new projects our team has been developing that have a higher IRR than traditional Bitcoin mining, based on using waste to generate energy and leveraging the heat from Bitcoin mining profitably for low-grade industrial process. It would be premature to discuss details at this time, but given the scale and diversity of applications, we believe the market opportunity here is substantial and the prospects are incredibly exciting. Heat reuse is a concept that we see becoming more significant and scalable in the coming years. Bitcoin miners are more efficient at generating heat from electricity than most other alternatives, including most space heaters, which do nothing but create heat by consuming electricity. We are currently exploring projects that involve using heat from our mining systems at both large and small scale to provide heat for industrial processes, commercial buildings, homes, and even just a living room. It's only a matter of technology and capability, and Marathon has both. Marathon's technology group is finalizing the development of a highly scalable immersion technology that enables heat reuse projects in many different form factors, sizes, and applications. And we'll be speaking more about this in the near future. Over the next 5 years, our objective is to have 1 gigawatt of power dedicated to these various applications that are separate from the utility scale mining we're known for today, but that are directly in line with our core competencies. At the heart of these initiatives is our technology. While our growth team initiates potential new projects and our operations team develops and scales our sites, our technology team has been hard at work building and launching new tools and services for those who are building the future of Bitcoin. The first of these is Slipstream, which is the direct transaction submission service we announced last week. For the Bitcoin community, direct submissions are designed to mitigate censorship and encourage development on Bitcoin. For Marathon, the higher fees may help increase revenue. And as far as we know, Marathon is the only miner capable of offering a direct submission service and benefiting from the potential increase in transaction fees because we're the only miner that operates its own mining pool. This is one of the many reasons we believe there is a strategic value to owning our own pool and focusing on vertically integrating our technology stack. Enduro, which we announced earlier today, is another innovation we have been hard at work on. We believe Enduro may be the world's first, most Bitcoin-native Layer 2 network, and it is intended to serve as infrastructure for the next generation of Bitcoin applications. This is something we have helped incubate, but it is not something that we own. Enduro is for the pioneers striving to redefine blockchain adoption. Therefore, it will be community-led and community-driven. Why give something like this away for free to the community? It's actually quite straightforward. We have a vested interest in the Bitcoin ecosystem. We're the second largest holder of Bitcoin among publicly traded companies and the largest single publicly traded organization working to process Bitcoin transactions and secure the network. Our core competency is converting energy into economic value in the form of Bitcoin. Therefore, if Bitcoin flourishes, so do we. This is also why we helped raise approximately $800,000 in just 4 days last year to support Bitcoin core developers, $500,000 of which was contributed by Marathon itself. We believe that Enduro can have a positive impact on the community, but we also recognize that different people have different views on how best to extend the utility of Bitcoin. We believe in testing, iterating, and letting the market decide what works best. It is that experimental and agile mindset that is core to Marathon's DNA. And as we look to scale in 2024 and beyond, it will remain one of the primary differentiators that sets Marathon apart. Marathon's leadership team consists of people who think differently and are willing to try divergent ways to execute and deliver on our vision. While 2023 was a banner year for Marathon, we have never been more optimistic about Marathon's future, and we look forward to building on our accomplishments to leverage all of our assets to build a more sustainable and inclusive future. And with that, I turn it back to Charlie for Q&A.
Thanks, Fred. At this time, we're going to commence the Q&A section of today's call. We'll start by answering some of the most popular questions submitted by investors through our Q&A platform. So the first question comes from Rex R, who asks, is the company more profitable after BTC halving?
What a question.
I'll take that question. Thank you, Rex. Thank you for asking the question. Just for the benefit of everybody, halvings are unique to this industry and Bitcoin and force the industry to become more efficient
price climbs a lot.
every 4 years.
But either way, they're less profitable.
The drop in the block reward forces the inefficient operators out, and the most efficient one remain. And we expect this likely will help us gain market share as we go through the halving. The impact on Marathon will depend on where the Bitcoin prices go from here. Obviously, there has been a great run in the Bitcoin price recently, and it all depends on how much the competition falls from here as well, with those inefficient miners, which could drive some interesting activity in the marketplace. With that, we have a significant Bitcoin holding on our balance sheet, and given that fact, if we do the math, simple terms, every $10,000 change in Bitcoin price will result in approximately $200 million of change in our EBITDA on an annualized basis. And in the current price environment, we expect to be profitable with the assumption that the competition will, certain of those machines will go down, and it will provide us opportunity to create more value for our stockholders.
Yeah, he's probably
Hopefully
right.
That answers
enough Bitcoin to make them profitable.
One thing I'll just pile on top of Salman's great answers. The fact that we are very focused on growing parts of our business that generate higher IRRs than traditional Bitcoin mining. So we have one of the most efficient fleets in the industry. And if you think about the 45 exahash of machines that we have on the inbound between orders and options,
that will help.
And you just look at the orders that are locked for delivery at this point, our efficiency will drop from 24 joules per terahash down to somewhere around 22 or near 21 joules per terahash. Again, maintaining the most efficient fleet in the industry. Our technology investments in heat reuse projects and areas adjacent to Bitcoin mining will allow us to mine Bitcoin at large scale, though across multiple smaller installations, at costs that may at times sometime approach near zero energy costs because of the fact that we're actually paid to generate electricity in some cases.
See, that's going to be
we believe as a miner, if we can target being in that lower quartile of miners, no matter what the price of Bitcoin and what the global hash rate is, we'll always be able to operate relatively profitably.
That's an interesting idea.
Great. Thank you both.
I don't know what
our next question comes from Tarek A, who says, I love your work and think you're heading in the right direction. A lot of critics are worried that if the crypto market fluctuates, your company won't be able to handle the fluctuation. Fred, Salman, how do you address that concern?
Not worried about that.
I'll take that. Well, we've been focused on building resiliency. We're investing in technology, diversifying across the business, and paying down debt, positioning ourselves for the worst of storms, no matter what might happen. We have one of the strongest balance sheets in the sector with $1 billion in cash and Bitcoin, which gives us the strength to survive whatever comes our way. And most importantly, this is not our first cycle. Marathon was built during the last down cycle. And we maneuvered it well and have come out on top of the industry again. And we've never been more confident in our future. So I hope that answers your question.
Thanks, Fred. We have two questions next that are a little similar, so I'll kind of ask them back to back. The first is from CK, who asks, why did Marathon use equity to purchase 183.5 Bitcoin in January, after stating on the Q3 earnings call in November that equity was only to be used to drive growth in hash rate? Also, please explain the 2024 treasury strategy, i.e. what is your target HODL cash for halving and the end of 2024? And then similarly, Samir A asks, will the company purchase any more Bitcoin on its balance sheet? So either of you would like to take that and speak a little bit to Marathon's treasury management strategy?
Sure, I'll take that. Thank you guys for asking the question. Look, the company has stated in the past that we want to utilize equity for growth purposes and investment in exahash, whereas we've utilized Bitcoin for paying for our operating costs. And that's primarily what our stated strategy has been, and we followed that along. In terms of how we have used cash, opportunistically, we have looked at the cash to take advantage of drop in Bitcoin price in certain cases. As you know, cash sitting in the balance sheet with the amount of cash that we raised, that yields about 5% in U.S. Treasuries. And when we look at it from an investment standpoint. How can we maximize our investments either in cash or Bitcoin? And when there are opportunities that arise, like an unusual situation that happened in January with the ETF launches and price went down temporarily. We knew that the price was going to come back up, and that was a great opportunity to create more value for our stockholders, and we took a small position, and that has been a very profitable investment for us instead of 5% rate of return on U.S. Treasuries. But our core business remains Bitcoin mining, and our primary focus and source of equity is going to be growth investment. Given the unique situation of Bitcoin price, and this was an unusual opportunity, we don't expect these kind of opportunities to regularly arise, but we will be opportunistic in nature, up to a small scale, if you like. Our HODL position and cash, it provides us a great mechanism to fight any downturns. As the Bitcoin price, different cycles, it goes through the halving, it goes through the up cycle, down cycle. We're in a driving position from that perspective. It also provides us a great opportunity for investors to ride the price as Bitcoin price appreciates from here. Just to summarize, in future, we may monetize Bitcoin for investing in our company or general corporate purposes, but as of now, our focus remains to use equity for growth and Bitcoin for operating costs.
Great. Thanks, Salman. The next question comes from Michael S., who asks, what is your ETH or Ethereum mining percentage and your Bitcoin mining percentage and overall mining capacity as of today? How much Bitcoin and Ethereum are on hand at the company currently? Fred, do you want to take that one?
Sure. We don't mine ETH.
Nobody mines ETH. What the fuck?
Next question.
Short and sweet. All right, next question comes from Monhar C., who asks, what are your plans to compete with competitors based on the hashing power metrics? Mara does hold a lot of Bitcoin, but the efficiency is somewhat less as compared to Riot and CleanSpark. Are there any plans to address that?
Their new equipment will.
We're constantly focused on really two things in our mining business: energizing more hash rate and optimizing the hash rate that we have. And our efficiency has increased significantly year over year, partially because of the machines that we deploy, and having one of the most energy efficient fleets in the industry. Continuing to have that will be a stalwart part of that strategy. We also are the most efficient miner of the publicly traded miners, or one of the most efficient on an SG&A basis. And you have to look at the total cost to mine. You can't just look at your marginal cost to mine a Bitcoin. You have to look at the overall cost what is the corporate cost to mine Bitcoin when you add all of the expenses and allocations to it? And we believe that we operate as one of the more efficient miners using that metric already today. But we are very focused on optimization. We're going to continue to roll out more and more parts of our technology across our fleet, which we think is going to increase our operational efficiencies even more. And now, as we take control of more and more sites, if you compare us, for example, to CleanSpark and Riot, who own their sites predominantly, whereas Marathon historically has not owned their sites, we now own and control 44% of our hash rate. And we expect to see that number grow considerably to the point where the vast majority of our hash rate is owned and operated, which means that we have a significant opportunity for cost reductions just through the operating line, which we believe will put us on par, if not better, than both of those players.
Great. Thanks, Fred. I think we'll do one more just kind of in the interest of time. This last question, at least of the prepared questions, comes from Michael W., who asks, what is the plan post-halving to ensure revenue stays the same or goes higher? I think we've addressed this a little, but Fred, do you want to take that one?
Well, when halving occurs, you produce half as many Bitcoin for the same amount of hash rate, provided global hash rate stays the same. One of the reasons we have set such aggressive growth targets is to make sure we continue to grow our hash rate and grow our percentage of the global hash rate for all miners. So our focus is rapid growth. Our focus is optimizing existing operating metrics and continuing to generate revenues that are complementary to mining from our technology products as well as things adjacent to them.
Great. So at this time, we'll wrap up the prepared questions. And again, we really appreciate all the questions and the interest from our investors and the consistent dialogue. So please feel free to keep submitting those and contact us anytime. And at this point, I'm now going to turn the call back to our operator, Kevin, to open the line to questions from our covering analysts. So Kevin, back to you.
Here we go. This is interesting.
Thank you. We'll now be conducting a question and answer session with Marathon's covering analysts. If you'd like to be placed into question queue at this time, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you'd like to remove your question from the queue. One moment, please, while we poll for questions. Our first question is coming from Tyler DiMatteo from BTIG. Your line is now live.
Yeah, hey everyone. Thank you for taking the time and good afternoon. Congrats on the excellent 2023 as well. Fred, I'm just curious here. We've made a lot of strides on expanding the hash rate as we roll out these different technology offerings. As you look out for the rest of this year and into 2025, I mean, how do you think about prioritizing the expanding of your own hash versus maybe some of these other tech offerings and kind of just going back and forth between the two?
Sure. Great question. So you can think about our business as organized around three predominant silos. One is what we call utility scale mining. This is our traditional business, sites like King Mountain or Granbury, Kearney, and what we're kind of doing in UAE, et cetera. Large scale sites, hundreds of megawatts sitting behind the meter or adjacent to the power source and helping balance grids. We see very large opportunities for that internationally. The UAE sites together are 250 megawatts. Today, we have opportunities to expand further, not just in the Gulf region, but also in Africa and Latin America, where we're currently operating in Paraguay, and we'll continue to do that. We believe that's kind of low-hanging fruit. We also believe there are great opportunities domestically, both in the area of greenfield sites as well as the existing sites, similar to the transactions we did kind of with Granbury and Kearney. The second silo is what we call energy harvesting. This is where we leverage Bitcoin mining as a producer of heat, and we predominantly find sources of energy such as methane flare gas and other forms of, let's just call them recyclable biofuels that we use to generate energy. In some cases, we're actually even paid to do that, to take that material, and then recycle heat back into an industrial process, which we're paid for yet again, and mine in that way. Our technology group has developed solutions, and together with the partners that we started developing relationships with, we're able to build these projects at kind of small, medium, and large scale. And so I think you'll see news later this year of some of the first of those projects arise, and that's the sector of the business that we expect to grow to over 1 gigawatt of power over the next 5 years. The technology sector, or silo if you would, today consists of things like pool software, firmware, controller boards, a variety of other technologies, as well as now Slipstream and Enduro. While Enduro is technology we have helped incubate and is not something owned by us, that we won't generate revenues from it, Slipstream does generate revenues. So we already have customers that have bought and are using our firmware. We expect to see more sales in those areas. And as our next generation immersion technology comes to market later this year, we expect that to begin to generate significant revenues as well. So if you look over a 5-year period, and sorry for the long-winded answer, but if you look over a 5-year period, I think what you'll see kind of by the next halving in 2028, 50% of our revenues coming from traditional utility scale mining, 50% of the revenues coming from elsewhere, and 50% of the revenues domestically, 50% of the revenues internationally. And I hope that answers your question.
Okay, no, great, thank you. Really appreciate it. Very helpful. And then, Fred, on your comments on Slipstream there, I mean, how should we think about the rollout of that and the actual implementation, and generally as management, you know, how are you thinking about bringing that and kind of scaling that to market?
So Slipstream is this really neat technology. It's an API. It's a submission system. So you don't have to call a salesperson. You don't do anything. You go to the website, you submit a block, you pay the price for submitting a block, and that block goes into a queue, and off it goes. It's a hands-free system. It's think of it as simple as you know, uploading pictures to you know, the iCloud or something like that. It's very simple. The whole idea is it's meant to be hands-free. So if you are an artist and want to submit a block, you can do that. If you're a financial institution and you want to ensure that transactions you're doing will have priority, you could potentially, you know, purchase blocks in advance and essentially submit blocks as you need them. So there are lots of opportunities, I think, for people to use this. Again, we're iterating. It's a simple tool. This is technology that the key enabler here is you have to be a miner who operates a pool that's large enough so that you can submit blocks and process blocks, win blocks, with enough frequency so that the temporal nature of the use of the product makes total sense.
Look at that Bitcoin dominance.
Okay, great. Thank you. I'll turn it back to the queue. Really appreciate the time.
Yep. Thank you.
Thank you. Next question is coming from Joe Flynn from Compass Point Research. Your line is now live.
Guys, looks like power prices, you know, creeped up a bit from the third quarter, got back into like 6.5 cents levels. Just kind of curious if you could provide more color there and how we should think about, you know, all-in power and hosting costs as you guys transition to, you know, the 40% owned data center model. Thanks.
So one way to look at that is you have in our normal model, pre-being an owner-operator, many times we don't get the benefit of curtailment when an operator of a site curtails and they get the economic benefit of the curtailment. And there were some winter events in Q4 that can cause, had an impact there. You also had, because it's wintertime, energy prices may have fluctuated more. I think historically our energy and our kind of all-in cost has been in and around the 6 cent per kilowatt hour basis. As we take more control of our sites, the operation side of it, I think you'll see the cost per kilowatt hour drop somewhere between 1 to 1.5 cents, possibly more per kilowatt hour. The other advantage that we have by being an owner operator is we can now take advantage of economic curtailment. We can now take advantage of power hedges. We can now take advantage of buying and selling power and doing that. And we have already seen the economic benefit of that on a handful of occasions this year already. So I think, time will tell, but the goal is that, we should be able to operate where the operations cost above the power cost is somewhere between 0.75 cents to 1.25 cents a kilowatt hour. Take the power cost at about, 0.75 to 1.25, and that should be where you could model longer term what the model looks like.
Cool.
Yeah, just to add to that, the Q4 we had a record production, and it's all about the scale. How much of that cost of that production can you squeeze out of that cost associated with that? There's a fixed component of the cost.
I'll do a recap at the end,
with
guys.
The transaction fee being at a record high this quarter, that certainly helped us as well from a unit cost perspective. Hopefully that helps answer your question.
Great. Yes, thanks, guys. That's all for me.
Thank you. Next question today is coming from Reginald Smith from J.P. Morgan. Your line is now live.
J.P. Morgan. Here's the big dogs.
Hey, good evening. Thanks for taking the question. I guess most topics have been covered, but Fred, I wanted to get your opinion. Obviously a lot of public miners have announced, fairly large ATM offerings. I guess competitively, as you kind of look across the landscape to both, private companies and public companies, do you have a sense of how much capital is out there, maybe on the private side as well, to kind of fund growth? And I'm curious, should we expect, or do you expect that the public miners will continue to kind of garner a larger and larger piece of the network hash rate? And then the final question, or the follow-up to that, is just, kind of what's industry CapEx kind of look like on a normalized basis? I know these are all hard questions, but I figure you're the best person to apply.
Okay, I will do my best to answer your questions. So I think that, generally speaking, this industry has 3 choke points, 3 constraints. It's access to capital, as you mentioned. It's access to capacity, sites to plug miners in, and it's access to miners. In different cycles, there have been different constraint points. In the prior cycle, access to machines was the constraint point. You had, $85 per terahash pricing on machines, and today we're still sub 20. So that's obviously not a constraint today, and as based on the machine orders you've seen our peers announce and the numbers we just announced, obviously the manufacturers seem to have plenty of capacity to supply us all, so that's not a constraint. On the capital side, the public miners that are ASR eligible, able to raise money through ATMs, have a significant advantage over everybody else. The investment community today is definitely looking for and moving towards a flight of quality, if you would. They're looking for the miners who are able to grow and execute and scale. And the smaller miners are challenged by a couple of things. One is, there's a certain fixed cost to operate as a miner, if you would, your SG&A. And if you can scale that over very large capacity.
One sec here, guys. Might have crashed my browser. Oh no. I feel that. Not sure if you guys are still there. Do we end stream? All right, one sec, guys. Trying to see. I'm not sure if you're still here, but I'm going to try and get this working if I can.
The S19J Pro by Bitmain was a machine that started being delivered in late 2020, early 2021. That had an efficiency of about 30 joules per terahash. The XP started being delivered in early 2022, and that had an energy efficiency of 21 joules per terahash, almost a 30% decrease in energy use. And so if you are paying for 1 megawatt of power and you had J Pros and you replaced those J Pros with XPs, then you essentially increased your hash rate by almost 30% overnight without having to pay any additional power or add any additional capacity. In Marathon's case, we came out of the last cycle buying the latest state-of-the-art machines. The vast majority of our fleet today are XPs or better, and we're now currently deploying S21s and other machines like them that are even more efficient than the XPs. So there's this CapEx cycle you just have to keep up with. And there is, unfortunately, nothing called normalized CapEx here because we're entering the phase where maintenance CapEx starts to catch up with miners. The J Pro is on the bubble of being profitable come the halving here in just a few weeks. XPs will still be profitable, again, providing you have the right power costs. And obviously the S21s and that next generation will be profitable for some time yet to come. But the miners who are operating S9s, S17s, S19 Pros, they are going to be in a position where they may have to shut off a lot of those machines come to halving. Now, Bitcoin has been behaving extremely well. Some of you may remember I have spoken a number of times over the past 6 months where my expectation was that Bitcoin's price was going to be in the 40s as we went into the halving, and here we are, and we're at $61,000 today. So this is providing an extra gasp of breath, if you would, for miners who have these older generations of machines. Yeah. And it's giving them an opportunity to raise some money right now. And so you're seeing some capital going into the private markets. What you don't have this cycle that you did have in prior cycles is nobody is lending on equipment, right? You can't go call NYDIG or Galaxy and say, hey, guess what? I want you to lend me and front me the money for these miners. And so the only way to do that is to convince somebody like Bitmain, a hardware vendor, to do it for you. And then what you're really doing is just operating a hosting site on their behalf, and you're getting paid a little bit extra to do that. And so I think this is the cycle where you start to see consolidation, where hash rate moves towards the larger miners. That being said, publicly traded miners' market share of global hash rate is declining. Why? Because sovereign nations, as well as large, very well-funded private companies, are getting into this business, buying the latest machines without this maintenance CapEx cycle hanging over them, and building a lot of capacity. You're familiar with the Kingdom of Bhutan working with Bitdeer to add 200 megawatts of capacity. You're seeing miners now in Ethiopia, Chinese miners moving to Ethiopia, doing hundreds of megawatts of power. There is lots of power available if you can find it, and if you have the money to do it. The problem is most of the mom and pop miners, any miner who has less than 10 exahash, in my mind, will be out of business by the end of this cycle. They just can't raise the money. They don't have the critical mass to do it. And that doesn't mean that they're going to get bought up by ourselves and Riot and CleanSpark and people like that. It just means they're going to go out of business. And so meanwhile, global hash rate is going to continue to grow everywhere else. So, this is very much, unfortunately, a business where, kind of like in the jungle, a gazelle gets up every morning and has to run faster than the lion that's chasing it, and the lion has to get up every morning and run faster than the gazelle so it can eat and survive. And that's kind of what just happens here. It's this constant drive to grow. And
how do you pronounce your name?
Bitcoin now starts developing into this asset class, which institutions hold. You're already starting to see this with the ETFs. record inflows into the ETFs. As of last week, total AUM in ETFs was 40% of the total AUM in gold ETFs, which is insane. And as money keeps going into those areas, it's Bitcoin that won't cycle back out into the market. And so you look at exchanges today, there's lowest volume of crypto available, of Bitcoin available on exchanges, kind of historically when you normalize for where we are in the cycle. So I think it's going to be very hard for people in this industry to keep up, because Bitcoin's price is going to grow and the volatility is going to start to decrease. It's going to start to normalize. And at that point, margin compression will happen in the business. And if you don't have scale, you'll be out of business.
I agree.
And our goal, as being one of the largest miners in the world, is to have the scale, the operational capacity, the optimized cost structure, and the revenue streams that are adjacent to and associated with Bitcoin mining, that, think of it this way, can subsidize our cost to mine, or that because of the revenue streams coming in through heat reuse, et cetera, do subsidize the cost to mine, make us the operator who is kind of at the lead of this pack in the bottom quartile cost-wise. So we will always be operational. We'll always be able to mine, kind of no matter what the price of Bitcoin, obviously within reason, right? So hopefully that answered your question.
That was a great answer. I feel like I just had a master class on Bitcoin mining, and I should send you tuition or something. No, I appreciate that.
I'll send you a bill.
All right, cool.
Thank you. Next question is coming from Kevin Dede from H.C. Wainwright. Your line is now live.
Thank you. Hi, Fred.
Hey, Kevin.
Thanks for having me on the call. A little more granular here, Fred. 22 exahash to come out this year, and 35 to 37 potentially. Can you give us some insight on how you see adding it to your network?
Sure. If you're thinking, where are we going to put it? Well, one of the reasons
No. I apologize, Fred. You made that clear in your prepared remarks. I'm more concerned about the timing, just so we have, a view to how you see Marathon's hash rate increase through the course of the year.
Sure. If we had historically been a kind of de novo site developer, I could give you a whole pipeline with a chart of, okay, these sites will energize on this month, et cetera. That's not been our historical model. Our historical model has been, as you know, agile, grow quickly, and we're now in the business of, being more of an owner-operator and vertically integrating. So you can think of sites across three buckets. There's the bucket of, I'm going to go buy things like Granbury and Kearney, where there's excess capacity with an ability to grow. And as the hosting customers at those sites age out, as those contracts age out, we will absorb all that capacity ourselves. So we're looking, think of it this way, you have a site with 100 megawatts, maybe 80 megawatts is used. Okay, we can plug 20 megawatts of miners, and then over the next 2 years, half of those contracts for the 80 megawatts will age out, and we'll start deploying more and more miners there. And oh, by the way, that site could potentially add 100 or 200 megawatts more because of the substation, and we'll develop that and add that capacity. So not to give everybody our playbook, you can send me an email, happy to send it to you, but that's how you look at that bucket. If you look at the next bucket, it's sites that somebody may have permitted, somebody has gotten some form of allocation of power. There's a substation available. They may even have transformers on the ground, but they haven't built the site yet because they don't have money. And this is kind of back to Reggie's question, right? It's there are people who have sites locked up that they can't raise the money to develop them because investors aren't willing to give you money in today's kind of market for Bitcoin mining data centers, because they prefer to give money to people building AI data centers, because there's a lot more money to be made there if you believe people who believe that that's the case. We happen to believe Bitcoin mining is the place to be, but we'll let the rest of that be up to contention. So those are kind of, think of them as halfway done sites. It's kind of like in the real estate development world, It's not raw land. You've actually bought the land, got it entitled, you've laid the sewage and utility lines, and now you're going out calling to the home builders and saying, hey, you know, I've got 16 lots here, you want to build a home. So that's that kind of middle bucket. These are sites that could be energized and online in a 6 to 18 month window. Then you have the true greenfield sites, you know, where we have folks that are out today scouring opportunities to acquire access to power, access to land, access to transmission, interconnect, et cetera, on a global basis, not just in the U.S. And those are kind of 18 to 24, 36 month type projects. And so we believe that as a
pretty smart, dude.
Global world-class Bitcoin miner, you need to build a stack, if you would, of staggered projects that give you immediate capacity, midterm capacity, and long-term capacity, but that all have optionality. So I'll give you an example. Granbury, Texas, has about almost 300 megawatts of capacity today. There's an opportunity to expand it because the power station has lots of power. So that gives us optionality. We could add more capacity to it if we want to invest the money to it. So you already have a site, you already have a power partner, you already have access to substations, et cetera. It's just a question of when do you want to start developing it and how much money do you want to spend to develop it? And what are you going to use that site for? Immersion, air-cooled, whatever. With the longer-term sites, the optionality is it's very inexpensive to tie up an option on long-term power, access to a substation, relatively speaking, when you talk on a per megawatt hour basis, and lease land. And you can sit there, and this is, you know, the business that in the old days, the kind of compute norths of the world used to do, which is they would go out and they would tie up a deal with a power company, and then they'd go find a miner who would essentially be willing to fund the build out of the site. And then, you know, 12, 18 months later, you'd plug in. The King Mountain site in Texas was done that way, right? We engaged with Compute North back in the day. They engaged with NextEra Energy, and they got the power, they got everything permitted, and then they built the site, and then we came in. In this case, we're acting as the builder operator, right, of those sites. And so we're working along all three of those tranches, if you would, today, with partners and directly ourselves. And so our goal is essentially to have think of it as a storehouse full of either readily available immediately today mining capacity, midterm available capacity. There's an option for us. You know, we know that when we need it 12 months out, we just turn the crank and it'll be operational, already permitted. You know, you already have all the transmission, et cetera. And then the longer term sites where, do we want to build 100 megawatts, 200 megawatts, 500 megawatts at a location where we may have 700 megawatts of potential capacity if we're willing to do the longer term investment. And especially internationally, those longer term, you know, that last bucket, there is a lot of available opportunity there. Ethiopia, Paraguay, et cetera, et cetera. So, you know, the goal here to build a really resilient business is you build a huge pipeline and lock up potential capacity of sites with optionality to it. And by the way, I'll mention one thing. The Granbury site, for example, the way the PPA works there is it's not like we have to take all the power. We can actually, in the event of really bad pricing in the marketplace, scale it back. So we have ultimate optionality there, which is the best thing, right? So, you know, you look for creating a portfolio of capacity that is short, medium, and long term. Excuse me. You look to have a portfolio and access to technology, which is short, medium, and long term. And I'll touch on that bucket right now. Short term is Bitmain, ship me S21s. All right. Medium term is, you know, MicroBT, Bitmain, Canaan. I want access to your chips. I'm going to lock up a supply of chips. You're going to sit on them for me, and then I'm going to tell you when I want you to build the miners. This is a very different model. This is a model from the PC industry and the technology industry, and no small player can do this. You have to be able to write a $50, $100 million check to one of these people and say, I want so many wafers of your chips. And then when I tell you to, I want you to turn them into miners. And in that way, I can lock up capacity, and I have no worry about getting access to chips. And the last one is what we've done with Auradine, where we actually own a part of the company who's designing the chips. Why is that important? Because we can get miners that have specs specifically suited to our needs and use cases. And when you see the two-phase immersion technology that we'll be releasing later this year, you will see the benefit of that. Where any other traditional miner, whether it's Riot or CleanSpark, if they don't know how to build technology products, they are going to be buying off-the-shelf PCs when we're busy building custom-built high-performance systems. And that's the differentiator, longer term, that we believe is the biggest moat with these guys.
I'm very much looking forward to seeing Auradine product in action. So thank you for that color. Can we peel the onion back just a little bit more though, Fred? Based on the numbers that you offered this afternoon, 22 exahash, you're at 24 now. Does that mean you're at 27 by the end of March? Does it mean or if you're going for 35, does it mean you're at 40 by the end of June? How should we think about how that capacity actually comes online through the year?
So we're already at 27. We were at 27 at the end of the year, pretty much. So
okay.
So I think the way you have to look at it, Kevin, is I'm not going to lay it up for you because we are going to play the game here where in 2022, we said we're going to deploy this hash rate. We had these machines, and then I was getting the question, hey, are they plugged in yet? Are they plugged in yet? Are they plugged in yet? So we're just going to talk about stuff when it goes live going forward. So we're giving you an idea as to what our pipeline of equipment is. Unfortunately, I can't help you model the when because you're going to see it will come in very interesting lumps, not smoothly. But when it comes, it's going to come a combination of at a rush and then in blocks. So I wish I could say more, but I can't.
Thank you. Our next question is coming from Lucas Pipes from B. Riley Securities. Your line is now live.
Thank you very much, operator. Good afternoon, evening, everyone. Fred, my question is around the capital budget for 2024. What is it, and would you be able to break it down between miners and infrastructure? Thank you very much.
Let Salman answer that question.
Yeah, Lucas, it's I think we talked about it last time as well. This is what we're looking at from a total capital perspective with the targeted growth that Fred talked about earlier today. We're somewhere around north of $200 million, so somewhere between $200 to $245 million, somewhere in that range, and that includes our miner purchases and roughly approximately $180 million or so. Just a quick reminder: we have been buying and paying for some of these miners, so some of those payments may have already happened. I'm just talking about the accounting capital here. In terms of the rest of the stuff, we have other, technology businesses and other ancillary businesses that Fred talked about. A small portion of that will be allocated to that. And then on top of that, we also purchased Generate's assets in Kearney and Nebraska, and also Granbury in Texas. And that will be added to the capital, which is sunk cost at this stage, but that was about approximately $180 million.
And that of course is separate and on top of the other numbers you mentioned. Yep. And I heard it right. It's kind of $200 to $245 million for 2024, and about $180 million of that is for miners.
That is correct.
All right. I appreciate it. Thank you very much. Good luck.
Yep.
Thank you. Next question is coming from Brian Dobson from Charting Capital Markets. Your line is now live.
245.
Hey, thanks for taking my question. So you mentioned as we head into the halving, it's very likely for smaller miners to be pushed out of business. Do you have a view on the potential magnitude of the decline we could see in global hash? And could that decline potentially be offset by some of the other players you mentioned, like nation states or large private entities?
Great question. So one way to look at this is look at the nonce analysis work that a number of people have done that's been published readily available, where you essentially can see the amount of hash rate coming from what category of machine, and in some cases, locations, and even energy pricing data, if you have the ability to do that analysis. So there's the industry average efficiency today is somewhere around 30 joules per terahash. 30, 33 kind of varies depending on how many machines are on at any given time when you look at the nonce analysis. So at 33 joules per terahash and Bitcoin at kind of 55,000, post-halving, you'll likely see anywhere from 11 to 18% of the hash rate come off. Now, it may not come off all at once. Some people may have a few $1 million in the bank, and they're willing to say, you know what, I'm not going to shut off because I'm going to let the other suckers shut off so that I get the benefit of the hash rate dropping, and now I'm profitable again. And so I'm willing to take a loss for a month or two or three or four maybe.
It's been a good one.
So I would kind of say, if you have to look at kind of the window, kind of, having over, and then the first 6 months post-halving, that's when you're going to see kind of the people who are hanging on for dear life are going to hang on as long as they can. Other people are going to say, no, I'm out. I'm going to shut down and wait for better days, wait for Bitcoin price to go up or not. What you are not going to see based on the announcements of ourselves and our peers is the rest of the world slow down. And so you may very well have a world where by the end of this year, global hash rate is 20 to 30% higher than it is today.
I agree.
You may have a world where it's the exact same as it is today.
No, it's going up.
What I will tell you is that obviously it's very dependent on the price of Bitcoin. And the fact that, I'll go back to the thing about the ETFs. With the ETFs sucking up Bitcoin, and realize nobody can print Bitcoin. People talk about supply shock or the halving. Yeah, you go from 900 Bitcoin to 450 a day, so what? If every mine, 450 Bitcoin a day isn't going to do anything to the supply in the marketplace. What is doing it, what is creating a problem is the ETFs as they continue to vacuum up Bitcoin. And I don't really see it abating. It may not grow, but I don't see it abating based on the conversations I'm having with institutional investors, certainly, is that the available supply of Bitcoin in the market is going to start drying up. It already is. It's at record lows on exchanges. What that does is causes huge volatility swings in price. Right? That's where somebody at night, when the ETFs aren't buying, can short Bitcoin, drop the price down because there's no real demand, and then in the morning when demand comes up, the price comes back up, and there are already traders doing this. You may have seen a couple days, last week or the week before, where quant funds went in and 10x the volume that a couple of ETFs were doing as a test for this exact strategy.
Yep, that's true too.
I'm going to go short Bitcoin, that spot Bitcoin outside of the ETF market.
This guy knows what he's talking
about.
Drop
the price, buy it up, and then let the ETFs come back, drive it right back up, and sell it again. So you are going to see a market that is going to be having a lot of gyrations in it.
Yeah.
And when that happens, some miners will say, oh my God, Bitcoin price dropped, I'm going to shut down. Oh my God, Bitcoin price is going back up, I'm going to turn on, and you're going to see hash rate bouncing up and down, up and down, up and down, up and down. And it's going to make for a kind of crazy world. So I think, some miners are going to become sporadic miners if they have the right type of energy pricing contracts. Miners that have PPAs where it's take or pay, they have to buy
He's smart.
all 50 megawatts of
He's
the
actually more
energy they're
capable than
contracted
I
to,
remember.
especially
I
hosted
haven't
miners.
listened to one of these conference calls in like 2 years.
Let me take a minute and say that the third-party hosting business is dead. Nobody
I agree with him on
who's
that too.
hosting S19J Pros and paying 6.5 cents, 7
I'm
cents,
happy they're
8
looking at
cents
hosting
can be
their
in
own
business
stuff. They used to use
anymore.
it as a talking
Opposed
point.
to having, unless Bitcoin just goes on a real tear, because they just won't be able to afford to do it. Because they're not getting the economic benefit of curtailment. They can't subsidize their mining costs through other means. And so it's this third-party hosting business, the retail hosters, other than people who want to host because they do it for vanity purposes. I really don't see that business. And I get calls very frequently now from people who are hosting miners in locations saying, hey, do you want to buy my hosting contract? Do you want to buy the miners I have plugged in here and just take them over for me? And so I foresee that business dying. And so that'll be a certain portion of hash rate that temporarily will come off. But by the same token, there's somebody like me saying, you know what? I'm calling every third-party hosting guy saying, hey, listen, you know what? Do you want to, if you have an empty shelf, I may be interested in buying the shelf from you. I'm not going to pay you a hosting fee, but I'll buy the shelf from you. And I may buy you if you're interested in it. And so this is where I think you're going to see the consolidation.
Agreed.
And this is where balance sheet is so important, and just availability of cash. And so anyway,
5x the Bitcoin.
Could go on for a long time on this, but I won't.
It's a huge number.
Yeah, no, I think as just a quick follow-up to that, so is that where you see, call it the lion's share of appealing M&A post-halvings in that third-party hosting segment?
To some extent, again, who can afford to do it? I don't see, Riot, CleanSpark ourselves, yes, but Core most probably not. Core's business model is predicated on a 7-cent hash price. We'll be at 4 cents to halving. So, I think miners with a lot of debt, miners with balance sheets that are kind of wonky, can't raise capital, aren't going to be able to do much. And, in the case of Core, they have a big brother whose name is Bitmain, who's able to, plug miners in. They can do a kind of a rev share deal that way. But that's not a way to service $700 million of debt. So, the large-scale hosters are, other than, Riot and Core, are kind of disappearing and converting to self-mining. And the small-scale hosters, they can't afford to buy their own miners. So I don't know what they're going to do. And if they don't have good power prices, nobody's going to want to buy them. So.
Thank you. We've reached the end of our question and answer session. I'd like to turn the floor back over to Charlie for any further closing comments.
Please, no more.
Thanks, Kevin. Thank you all for your time today. If you have questions that were not answered during today's call, please feel free to contact our investor relations team at ir@mara.com. Thank you, and enjoy the rest of the day.
Woo! It's hard to make it to the end of that one. The 341 of you that have made it, I'm going to give you high praise. All right, so there's a number of things that were talked about. I'm going to focus on the bad first, and then I'm going to focus on the good. And there's a lot of good, honestly. But here's what I don't like about Mara. I don't like the fact that 2/3 of their hash rate was down for a decent amount of Q1. I don't love that. I don't love that at all. I don't love the $2.5 billion shelf offering. That's going to be a lot of dilution. This company's a little over $7 billion right now in market cap, so that's interesting. Let me see what else I have here. And then there's so many question marks, like the Aerodyne, immersion tech, building the own chips thing. That's interesting. I don't know what that will mean in reality, but it's very interesting. And if it is getting turned into something, it could be fascinating and really great. Slipstream. I don't know how much revenue they're actually making from this. It's interesting, though. They're basically saying, hey, we'll prioritize your transactions if you get blocks, we'll put you through ahead because we own the pool. I don't know, that sounds interesting. I don't know how much they can make or if it's even anything that matters in regard to their revenue. They have the largest amount of Bitcoin. That says something. They've got 5x the net worth of Bitcoin that CleanSpark has. That will be incredibly valuable to them in the future. They have the benefit of FASB accounting rules, which again, you can see how much of a bump that gave them with the value in their Bitcoin. It almost doubled. And again, Bitcoin's like 40% higher now than it was when their quarter ended. So this is going to look even better. This is going to help their earnings even more. And so their huge balance sheet, even the Bitcoin they bought, it's going to help them a lot. I do agree with what Fred was talking about, that the big corporate publicly traded miners are taking over. I think he's right. You want to be the big guys. These are the big guys. This is the biggest publicly traded miner, I would say, that warrants its size outside of CleanSpark. And Riot is maybe close, but again, I don't know. I just don't know if their expansion plans, their delivery, they replaced their CEO like a year and a half ago. I don't know. I just don't know that the execution's as good. I do like, I will say this conference call is way better. Yeah, they're down, but okay, real quick. So Mara is down. You're right. They're down 7.5%, but they were up 2.38% today. And then when you look at the fact that CleanSpark and Bitfarms were down 13 to 11% today, and now are up in aftermarket, I'd say it's kind of a wash with Mara in the last 24 hours maybe being in the lead. So they are down, but I would argue that they've actually outperformed over the last 24 to 36 hours. So I don't know that that's a big deal. And that might be a buy the dip thing. That might be short-lived. Bitcoin right now is going up. Let me see if I got it over here. I got it here somewhere. Yeah, right here. So Bitcoin is going up. We're already at 62.5 again. This is crazy because we washed out all the people that were really crushing the price. So this is more Bitcoin ETF inflows. This is nuts. Like I'm honestly shocked that we're already back up to this level. It's awesome. It shows the power of Bitcoin this cycle. It's way beyond anything I could have imagined. But again, so cash to debt, we're looking over here. These guys have more cash than they have debt. And that's a vast improvement from my complaints even a couple of quarters ago. You could see why I was worried about this, right? If Bitcoin was at 40K right now or in the 30s, and this was their debt load, and they hadn't diluted a bunch and made their position a lot better, I would be really worried. But I'm much happier seeing what they have today and seeing that they have more cash than debt. And again, so the bad thing, this $2.5 billion shelf offering, will also turn into a blessing potentially because they do have some older miners. He said they're really efficient. They aren't that efficient. Okay, there's a reason. A little over 2 years ago, these guys were all like, oh yeah, and we don't host our own stuff. And so we don't have to worry about all the overhead and stuff that goes with that. Well, that's different now, isn't it? Now they've got the exact opposite message where they're saying, hey, we're going to host all of our own stuff. And I think that's brilliant. I think that's actually the right move. It's good to see them getting there, but that was not their narrative before. It was quite the opposite, okay? So I like to see that. I like the fact that they're starting to do the common sense thing. I still have concerns because, again, they're not always timely on filing and not always filing the right paperwork. And then there's that whole short report from a year ago. But I will say, if I look at them a year ago to where I look at them now, I'm much happier at what I'm seeing. I like the fact that they're diversified across 11, different countries and multiple continents. I like the diversification. I love the fact that their revenue's climbing like crazy. I love their Bitcoin stack. I love the fact that the net income is heading in the right direction. I like everything that I'm seeing, honestly. And I'm curious to see what this Aerodyne is going to turn into. And I'm happy to hear that this new shitcoin sidechain stuff that they're talking about sounds like legitimately they don't have a pre-mine involved in this, but they're trying to work with others and create the tools for a layer 2 or multiple layer 2 solutions on Bitcoin's network that they don't directly profit from. Very happy to hear that. At the beginning of the call, I was like, what are they doing? Are they just trying to do a cash grab where they get, $100 billion or something by creating some shit coins that get pumped and they make a bunch of money off of it? And I didn't love that idea. It scares me, right? Every time somebody tried to fork Bitcoin in previous cycles and turn it into the new and improved Bitcoin or attach themselves to it in different ways, it was usually scammy and didn't work out. But they're not doing that, and that makes me happy, actually. It makes me happy that they're not. I was curious about the recycling project, but again, just a question mark. Maybe none of these things mean anything. Maybe they're just good talking points, and maybe it's just R&D that never goes anywhere. But I was interested in the recycling project thing, where maybe they have some small, outdated miners that are like, I don't know, in some deliverable pack or something that can generate heat for producers of equipment that need heat. I don't know. I'm just interested to see where they take that and if that amounts to anything at all. But I got to say, I left this conference call being a lot more impressed than I thought I would be. I don't know if I'm going to invest in this company still. But what I might do is buy more WGMI, which is the Valkyrie Mining Fund, which gives you, access to basically all of them combined. So you get maybe a little bit lower of a return, but you also have less risk. I actually still firmly believe in CleanSpark and Bitfarms. And Bitfarms has earnings on March 18th. I will do that too. But, and maybe I'll put a little towards Mara. Maybe. Probably not a lot, because again, I'm still trying to make sure that I trust them. But WGMI, that would be a good way to get some exposure to them. And I actually wonder how many miners are going to fail this cycle. It's freaking crazy to me how well Bitcoin is doing right now. It's way better than my expectations for this cycle at the beginning of it. And so, I don't know. Maybe we don't see that many miners fail. Maybe that WGMI fund is actually a pretty good investment opportunity. And yeah, so in after hours, we have Bitfarms up 4.5%. We have CleanSpark up 5.5%. So if you guys were dip buyers with miners today, I think you did the right thing. If you rushed into earnings for Mara, you probably didn't. But I think that will be bought up in after hours too. I think this was a good call for them. And again, I'm more impressed with them than I was 2 quarters ago. They've just done a lot more. And I like the approach of a lot of what they're saying. So maybe these guys aren't that bad. Maybe they'll do really well this cycle. It's very possible. If they're going to blow up, I would expect them to blow up and fall apart in the bear. It's probably not in the bull, unless they're just committing fraud. Anyway, hopefully I provided some value here. Thank you guys for everybody that attended. This was cool. Let's do it again. We're almost 3 hours deep, though, so I think I'm tapping out. Tomorrow, if you guys aren't a part of the market recap, every day we look at my portfolio. We talk macro from all different kinds of levels. We run through charts and look at different companies. And then we take those and try and figure out if they're legit, not just from a technical level, but fundamental level. So, again, if you want to be a part of that, join. Otherwise, I'm out because I'm